Good day, ladies and gentlemen. My name's Ryan, and together with Aaron, we are the RA21 podcast, a really adult show. Welcome back. So, how have you been, Aaron?
I've been good. I just finished my last service, so now I'm a pretty much a free man. So it's been good lah. So been catching up with a lot in the grassroots in the past 2 weeks. And of course enjoying my bowl of laksa in Singapore. For those of you who follow me on Instagram, because I've been deprived of laksa for the past few months. So it's been good. I also had laksa this morning also, so it's like awesome.
Oh, did the price of your bowl of laksa increase?
Um, You see, it's quite interesting that you brought it up because today is like the topic we're going to talk about is inflation, right? So like, yeah, I
Uh-huh.
mean like okay, so there's like two. This is a tale of the two bowls of laksa. The first bowl of laksa, right, basically like came from like a kopitiam in Singapore lah. I think in Singapore kopitiam is like the version of the Malaysian mamak store that you have in Malaysia, right? Then in Singapore we just call it kopitiam. So the laksa and the kopitiam was horrendous because it cost like $5 for one bowl. And then it didn't come with like fish cake. It didn't come with tauge. It didn't come with like it only gave me like two ham and basically like two tau pok. And it just gave me
That
the
sounds like a
sauce.
very sad bowl of laksa.
I don't know lah. It feels more like it's like sibei jialat lah. And then considering I'm paying like $5 for it, right? So it's very sad. They didn't even like give me the chopped parsley for that bowl of laksa. It's like this. Oh, it's like sibei jialat. So it's like when I came back, I said, "Oh, inflation is so." I say even though they like maintain the price, but obviously in terms of like the ingredient, they chop up 90%. Just give me one bowl of gravy like that, essentially, and one bowl of noodle lah. So that was the very bad version of the laksa. The good version of the laksa, surprisingly, when it comes to Singapore, right? If you want to actually eat like relatively good food at affordable prices, you actually have to go to those type of like mass retail chains where they actually have like a manufacturing facility to ensure consistent quality. So the laksa I ate was at Killarney Cafe Road. Killarney coffee shop. It was actually pretty good because it's like you pay 680, right? Then in comparison to the $5, right, I'm only paying like 30% more, but the quality is so much better because they give you like one entire egg, then they give you like fish cake, they give you tauge, then they also give you two fresh prawns. So it was really, really good, and the quality was very
Ooh.
good. Yeah, yeah. So it's like I mean, obviously, when you convert to Malaysian ringgit, it's like 20 ringgit for one bowl of laksa lah. But I mean, in terms of like cost, I thought it was a pretty good bowl of laksa, all things considered. So it's interesting because I think Killarney, this place that I went to eat, right, they actually have managed to consistently like keep the prices down for the people, so I think
Yeah.
relatively in terms of inflation, what I realized is that the ones that are really hurting in Singapore are the hawkers lah, because unfortunately they have to find ways and means to make a profit, even though like the rental is like so damn high. I give you an example. Do you know like a hawker, like you want to like there's this like hawker that I patronize very often, right, in Singapore, and they sell fruit juice. The fruit juice uncle, right? He has to like basically like close his shop. Do you know why? Because the rental increase per month is 15,000 Singapore dollars just to sell fruit juice.
Wait, so in percentage, how much is that? Like just an estimate.
God knows how much lah, but can you imagine paying 15,000 Singapore dollars every month for rental just to
Oh,
serve a neighborhood hawker center that is a aging population?
oh my
It's
god.
like it's like bloody ridiculous lah. Because it's like imagine like one fruit juice that poor fella only sell like $2 maybe 250, right? Then you jack up his rental by, I think the jacking up of rental is at least minimally 30%, because
Oh
from
my
even
god.
like in terms of like rental prices in Singapore, right? From what I've heard, right, the year on year increase is close to 50% in terms of rental. So a lot of these like people who come to work in Singapore, I think for the past year they've been seeing the rental prices gone up significantly, and then the quality stay the same. Yeah, so I think that's why I'm just giving like basically like the grassroots level of like how prices has been like in Singapore, because now that I'm back, right, then I'm like talking to like a lot of people, like basically talking about the jobs. Then what I do realize is that the job income has not actually been increasing in like the past year, even though prices have gone up.
Yeah.
Yeah, so I think it's pretty timely that we actually talk about it lah, because I don't want to be like the typical like idiotic like macro analyst who basically tell everyone like, oh, what inflation is like 82%. I say no one. I don't know why they can't see me. I don't understand, because like on the ground, end of the day, what matters more is the people on the ground, right? What are they actually facing in terms of challenges? So I think I've got a pretty good feel and grasp of what people are handling. So I think that's why we decide to like do this podcast today lah. Yeah.
Yeah, that's
So
right.
how about you, Ryan? Like inflation. So actually, I pretty much like answered like how inflation robs your wealth, right? Because like, you know, the first question is basically like how inflation robs your wealth. So I can go on to like the details of like, oh, inflation goes by 8-9%. But I think what's more powerful, right, is to basically like outline like the real to day happenings, right? For people on the ground who are suffering from inflation woes. So for Ryan yourself, because you're in Malaysia, how has inflation been affecting you?
Yeah, like the rent is definitely like pointing upwards. I'm just glad that I've signed my rental contract like before everything started to hike up, and I've been hearing like you know when I visit like supermarkets and everything, prices has definitely gone up. I used to be able to settle 1 to 2 weeks worth of like groceries depending on what I buy with like 100 ringgit. But nowadays it's more like 150, and sometimes 150 is not even enough. So it's been getting more and more expensive. But just to look at things from a brighter side, right, I think like judging from the supermarket price hikes, the stuff in the groceries and everything, I think like mostly the price hikes has kind of like come to a stop. It's still expensive, but it's not going up anymore. So I think that's like a good sign, I guess. But aside from that, it's been tough last quarter, not gonna lie. I had to do a lot of like organizing on my personal finances and everything to ensure like I have like sufficient cash flow and everything to survive for the next year and also. So yeah, it's been kind of tough. And obviously like eating less,
So you've been losing weight lah.
Unfortunately, no lah.
Unfortunately, so you still managed to gain weight even though prices have gone down. That's interesting. Um, like, I guess like okay, I think to put things in perspective, right? Like how when you say price increases, how many percent are you talking about in terms of food?
Well, judging by like how I'm able to wrap up my groceries for 100 ringgit before the inflation hike, and like after it's like 150, I would say like close to 50% if you
Yeah,
add
I think
everything up.
yeah, I think that's pretty much like the ballpark figure I find because now that I eat basically like I go to any hawker, I go to any kopitiam, I would say the minimum price increase is at least 20% because
Yeah.
I do some grocery shopping for myself in Singapore as well. So it's like a packet of like chicken fillets which I usually buy is now it used to be like 690. Now they check it up to 890. So it's like a 30% increase overall. So um I mean, you see, the thing is, right, in this like RA21 podcast, we have a lot of listeners, right, who have reached a certain level of wealth, so, and some of them are on their way to like reach a certain level of wealth. So when I say a certain level of wealth, I'm talking about like at least, anywhere between 5 to 10 times of the annual income in terms of liquid net worth, right? So the thing is, right, can you imagine, right, you are no longer working at the age of 65? I give a scenario. Let's say, my parents, right, or my mom, she's now the age, let's say she decide to retire at the age of 65. Then at the age of 65, she retires, she has this little nest egg which she invests in like treasury bonds and all these like bonds, right? And then suddenly, out of nowhere, right, within 1 year, everything starts to increase by 30 to 50%, as what we've discussed today. And then the thing is that your cash income from your retirement pension is not increasing. Obviously, it's not going to increase by 30%. It's not as though like 1 month suddenly you get like 2,000 sing every month for your pension, right? Then suddenly like because of this inflation, right, the next month it increases by 30%. So eventually what happens is that you have to spend less lah. You basically like pay more and then you get less. Correct. So I mean when you talk about inflation robbing your wealth, right? Just to keep things in perspective, assuming let's say right your inflation rate is let's say 3%. All right. I just do a quick numbers here. Let's say you're 100K today, right? And just let's say inflation is at a humble 3%. In 30 years, right, which is basically what a lot of our viewers are looking at, because if you're age 30, within 30 years, right, at 3%, right, $100,000, right, in Sing, right, in 30 years, that value will be depreciated to 40K. So you're talking about a 60% hit in terms of like spending power, right? If you check it up to like what the Feds are saying is 8%, right? 8% annual inflation rate, right, for 100K in 30 years would be leaving you, right, for a future value of $9,000, more than a 90% decrease in value. So, I mean, end of the day, right, inflation affects everybody. Whether or not you're a person who doesn't have a lot of money or if you're a person who has a lot of money. Because end of the day, inflation is something which I think a lot of people don't really attribute, unfortunately, enough attention to because it is something which is very slow and very quiet. And usually, you can have like 10 years of no inflation, even though with a lot of stimulus, like we've seen in the last 2010 to 2020, right? 10 years straight of like they say it's less than 2%. Then suddenly all you need is just that 1 year where everybody suddenly wake up, then realize, oh, so inflation is a thing, then everything jack up by 40%, right? So from my experience, all right, this is me like sharing my experience to people who have not like followed the money and the news thing, right? Is that from my experience, right, inflation, right, is not consistent. That is one thing I think everybody has to realize and know. Like the inflation rate that you see right now, it's not something that suddenly overnight people realize and wake up, oh, there's inflation. No, it has usually, right, from my experience, it is something that has been on the works, right, for the last 10 years. Because what you see today, you're talking about 30-40% increase in price, is because over the last 10 years, right, there has been a very prolonged, sustained period of monetary printing that did not translate to realization of the mass population. It's only after like 10 years, then people suddenly wake up, oh, actually, so my money actually not worth anything right now, so I need to jack up my price, and that's how you get it, right? So I think that's one thing that is why inflation robs your wealth because the what people fail to realize, right, is that the robbing, right, usually occurs, right, when you are not expecting it. And then when the time where they rob you, right, is suddenly one fine year, suddenly you start to see everything increase by 30%. And that's where they rob you. That's why we use the term rob, because it is not something that you realize that happens to you, but when it happens, they rob you one time good one. So it's like, inflation, they say, oh, it's 2% now, but actually you don't really see, right? Then suddenly out of nowhere, right, 1 year, right, suddenly they take, okay, I rob you one time good one, I just jack up my price by 40%. And that's how they rob you, lor.
Yeah, it takes you by surprise, huh?
Yeah, it takes you by surprise. So like, I'm just saying this, right, because anybody, right, who has been like investing since 2010 now, everybody always like to say, oh, there's no inflation, inflation is never going up. Then everybody know it was bullshit, lah. Everybody who has a brain would know that it's bullshit. Then when reality suddenly strikes in like 21, then everybody suddenly just wake up and realize that, oh, it's actually a thing, right? Then that's where everybody kena lah, right? So basically the point that we'd like to make is that just be aware of it and learn how to combat it. And that actually brings us also to the next point, which is that inflation is a vector. Actually, this particular topic actually came from one of the questions which we received on Instagram, and I thought it was a very good question to actually add it into the main point. And is inflation a vector? Is it bullshit or is it reality? What do you think, Ryan?
Oh, like what you mentioned, right? Inflation, like by definition, is the devaluation of your money. So, to say that it's bullshit, I don't think it's bullshit. You know, it definitely does rob you. I think like some people will think that it's bullshit, probably because like what you mentioned from 2010 to like 2021, people don't see it happening. Maybe on at like an annualized rate of like 1%. Definitely, you don't feel that in your groceries. You don't feel anything. Because year on year your expenses don't change much, and definitely over the 10 years I would say most people will have grown their buying power by getting raises at work and what building more income and whatnot. So the effects of the inflation year on year between 2010 to 2021, it's not noticeable. But like when shit hits the fan with like COVID, right? Then everyone starts printing money. Then that's really when you start to see the effects of like inflation. So like if you live through 2020 and 2021, and also 2022, you would kind of like experience the full cycle of like people printing money, and then at 2020, then 2021, money is like moving around, and then now 2022, we have like quantitative tightening, so it's like one full cycle a day, so um and within these 3 years, definitely you've seen like asset prices increase, and then that's where you get like all the Bitcoin like 60K, and then your Tesla at all time highs, as your S&P 500 at all time highs, and then now with like quantitative tightening, everything comes back down, and yeah, and people start to suffer, and groceries start to go up, to go up in price, and yeah, that's inflation. So like I do believe it's a vector, but it's just that it's something that's not measurable in like a very scientific way, you know, like it's not something that you can put into percentage, because in the end of the day, like money and all this currencies and everything, it's all based on like human behavior and politics. And again, politics is also just another way of saying human behavior. So it really depends on like whether they turn the printer on or not, and how do you put a number on that behavior, right? So I won't want to like define it as a vector, but I do acknowledge it as like a phenomena that will rob you of your wealth, if that makes sense.
Yeah, I think to answer this question, from my perspective, all right, is that the vector, right, cannot be seen based on the way to solve this vector thing, right, and not call it bullshit. It's actually very simple. Okay, and that is to add the factor, right, called time. All right, because this is my experience. All right, everything, in the long run, we're all screwed lah. Okay, in the long run, everything, all the price will go up one. Okay, there has never been a time from at least in my when I live, right, where everyone told me, oh, Aaron, this year is great, everything dropped in price. Apart from like asset crash, whatever that is, right? Um, in the long run, okay, what I learned is that everything increases in price. Right, there might be years where prices of assets and equities and stocks and investments go down, but this usually, right, do not last for a very long time. All right, and it's very simple. Later we'll go on to the podcast as to why. All right, and that inflation as a vector, right? This particular thing is true if you add in the component of time, because what people need to realize, right, is that prices of things around you, right, all generally go up. The only big difference is the time frame in which they go up. Okay, I give you an example. Um, Before this like gigantic hike in terms of food prices, what was the thing that came up that went up first? If you have
The
been a renter, all right, it would be your real estate and your renting, correct? So these are the things, right, which go up first. Whereas your food, your things like this, right, all don't go up. Okay, why is there a delay? Because this is where the factor comes into play. Very simple. Because when your rental goes up, right? Okay, the first thing that happens is that it will take at least like Ryan just now at the start of the mention, you say you're very happy and glad that you lock in your rental rate, right? Okay, my
yeah,
question to you, Ryan, is when does your agreement stop?
next year.
So what do you think is going to happen next year?
Oh, I hope it
You hope lah.
stays the
But
same, but
realistically
I
speaking, what do you think
I'm
is going to
looking at a
happen?
10% increase.
You're looking at 10% increase. So why do you think, right, food prices took so much longer to increase in price compared to real estate agreements? Very simple, right? Because a lot of these hawkers, right, they don't increase because the agreements are not up yet. That's why there's a time delay, right? So it's the same thing, right? A lot of things that you see in a hawker right now, right, or is things like goods that you buy inside, like all these things. The reason why the prices have not increased for some of them is because the agreement in the past has not ended yet, right? Which is why you see time delay, right? Because and now we're going to see the repercussions of the interest rate increase. Talking about this, right? It's also a very good example. Why is it that property prices, some places in the world, have not decreased yet? It's very simple. Even though they jack up the interest rate, a lot of them have put in place, right, fixed interest rate contracts for a period of 3 to 5 years. Correct. So now that, here's the kicker, right? The kicker is, right, a lot of these like loans of fixed interest rate for like 3 to 5 years, a lot of them, right, renew, and the bank has the right to renew this contract, right, every 3 to 5 years, and then peg it to the current existing interest rate. So what do you think is going to happen, right, for those people, right? The first tranche of people who took a lot of loans in 2020 at 1.24%, right, with a spread of 1%. So they're paying 2% right now, right? What do you think is going to happen to these people once their fixed agreement ends next year in 2023?
Wow.
The mortgage is going to
Yeah,
go
the
up,
interest rate,
right?
yeah, exactly.
You're going to go up, right? Because now they're paying 2.2%. And here's the fucked up part. Here's the fucked up part. For those people who took loans, right, in 2020 to buy houses that have not been completed, here is the kicker. They were not paying loans, right, for the full quantum for the first 3 years. Because if you buy a house that's not completed, you don't actually take the full quantum of the loan, yet you don't actually pay the full amount. So they only pay very minimal amounts, and they pay percentages according to the stage as to when the property is completed. So you see, you borrow money to pay overpriced, right, for a property that has not been completed, and then the bank also don't lend you a lot of money, right? But then 3 years later, your interest rate now doubles. Instead of paying 2%, now you're paying maybe 4 to 4.5%, right? And then on top of that, you actually take the amount of loan, right, in 2020. What do you think is going to happen next year?
Wow.
What do you think is going to happen? I leave it to your imagination, people. I leave it to your imagination. All right. For those people who say that this will not happen, the government will save you. Okay, kindly refer to the history of Singapore in 2007 and 2008. You don't believe me? Go and ask any of your old uncle, your old auntie. Go and ask them what happened in 27, 29, 2008. Okay, because all good things eventually come to an end because contractually, the banks are smart enough to realize, oh, I better have a stipulation that says that I can reset the rates because the banks are basically people who understand this game law far longer than you, right? So inflation as a vector, right? I don't think it's bullshit because I think what a person should see it, right, is that when you look at price movements, right, and especially pricing for goods, you need to be smart enough to identify that price will generally increase over the long term. Your alpha as a person who looks at price, right, is that you need to identify very acutely, right, at which specific time frames do you think that the masses will go up in price? Does that make sense? Because the prices might be down now, right? You're talking, let's say, for example, FANG companies and tech companies, they freeze hiring. In fact, they start to cut headcount, right? Now they're starting to cut headcount, right? So now because there's an influx of talent who got fired from these FANG companies, right? So now hiring people is cheaper, correct? But my question to most people is that do you think that talent will remain depressed forever in terms of pricing? It won't, right?
No.
Obviously, it won't because over time, what's going to happen is that so long as there's inflation, I said in order for people to eat, right? The companies who cannot afford to pay inflation-proof businesses, right? They generally come from businesses who are not inflation-proof, and eventually these businesses will die. Okay, that is the simple law of capitalism. If your business cannot turn a profit to pay brand new fresh graduate pay, right? Eventually your business will be out of business. Okay, that is a fact. Okay, because it's like a lot of people who tell me, oh, some businesses they're not designed for the 22nd century and cannot pay so much. Guess what? Business will die. Okay, give it 10, 15 years, your business will die because you cannot figure out a way to transform and change and stay relevant, your business will die. Right? Businesses that continue to thrive, all right, manage to pivot, they manage to invent something new, manage to innovate, and then they innovate, right? Then they create so much value, right? That their businesses have no choice but to grow. And then they can hire talent. And that is where talent will go to. Right. That is what you call economic capitalist society. Right. The money goes to people, all right, in the most efficient way for those right who's able to provide and help most people at any given point of time. And the way that it works is that bankruptcies need to happen, right? Because businesses that don't innovate, they deserve to die, they will die. Businesses that manage to innovate and keep up and do very well, they get a lot of capital, right? So when it comes to inflation as a factor, all right, I don't think it's bullshit. I think what it will be helpful for most people is that they see it as an opportunity. Yeah. So, okay, that brings us to our next chapter, right? And what causes inflation? Because, like, having understanding the time frame is one thing, right? But also it's important, I guess, to understand what causes inflation because that will actually help, I think, people to position themselves. So, Ryan, maybe you'd like to take this first.
Yeah, I think like from a layman point of view, what causes inflation is very simple. It's just when like the growth of the money supply. So basically, in more simpler terms, whether the government turns on the printing machine or not. So the more money that's circulating around the world, the less the value of the currency is. Then naturally, you have to pay more for certain goods, and it's kind of like a domino effect where one thing leads to another, like uh, people losing the jobs, not being able to pay for, and then they're not able to pay for their mortgage, and then they go bankrupt, and then it's a vicious cycle. So but yes, coming back, like what causes inflation is basically just the devaluation of money. It sounds very simple, but it's like a domino effect. Like things will happen. It's a chain reaction where a lot of like bad things economically will follow.
Yes, and eventually, I think what you will realize is that this is what you call economics like to call demand and supply, right? Because it's actually very simple, lah. Like what causes inflation is that when there is more demand than supply, all right, right, the prices generally increase. When there is more supply than demand, then the prices will decrease. So when it comes to money, right, in terms of like devaluation, right, the more people print, the less valuable your currency becomes, right? So if you have been like looking at the money printing rate, right? All right. So now I took out the money supply street economic data, right? From 1959. All right. The money supply the index was at about 300, right? Ryan, would you like to take a guess? What's the number at right now?
Um, if I'm not mistaken, just from word of mouth, right, 40% of the total money supply was printed in 2020. So I guess if I would just to give like a conservative guess, maybe 30%.
Yeah. Okay, so from 1959, when they started it, right, it was at 300. Right now, it is at 21,700.
Wow,
Yep. So you're talking about, was it 60 years? 60, yeah, about 60 years. 60 years of this, and the money supply has gone up by 73 times.
73 times.
Yeah, 73 times. So if you take a simple TVM calculator, you're talking about an inflation rate of actually close to 7%, actually.
This is like an annualized rate since
Yeah.
1960.
Yeah, so they've been like giving up 7%, like M2 supply has been growing at 7%. Yeah, but obviously if you take from like February of 2020, right, when they started, right, you're talking about 15K, so 15, so 21.7 divided by 15.5. You're talking about, yeah, you're right, 40% increase in monetary supply. Yeah, but we are annually we actually like put in close to 7%. So in terms of like demand and supply, right, the best way to measure it is through the M2. They have a chart, and they do have data since the 1960. They have actually been churning out close to like 7% on an annualized basis. So when you have this number, right, like the question is whether or not you think that, inflation will continue lah. And if you actually look at it, right, a lot of people always tell me, oh, inflation it will be a temporary thing. I say, but actually what you realize is that it's been going on since the 1960s lah. And if you have given, and the fact of the matter is, right, if you trace any single superpower over the years, right, let it be the British Empire, let it be the what you call it, the Netherlandic people, let it be the Dutch, let the Dutch East India Company, let it be UK, whatever, even for people in China, right? The main thing that really kills them was the hyperinflation that occurred due to over stimulus of their money. Right, even the Romans also kena also. So the cause of inflation usually, right, stems from economic policies that went to shit basically. Like they basically just printed too much, then like they couldn't like sustain it, right? It's one thing, it's okay to print enough money, right? The thing is, right, what I learned, it's okay to print money provided that your country can deliver. Right? If your country can take the printed money, right, and then like maybe 10x the utility of the dollar that you print, then maybe people have like 10x outcomes, right? Then it's okay to print money, But if your country, right, take the money, right, and then print, but then they don't like use the money to like 10x utility, right? Then that's when you have a problem, lah, right? That's why
Exactly.
when you look at America, right, the reason why they're able to sustain, okay, lah, they're not exactly a very old country. They're only like 200 plus years, right? The reason why they're able to sustain is very simple, because every time when they like increase all this money supply, right, they actually the mantra for America to succeed in capitalism is very simple. Every single business that went on to be multi-billion dollar businesses, they all touch on three things: better, faster, cheaper, right? The last time we had an inflation issue was in 1980s. What was America's solution to that? What was the food prices were increasing like shit? What did America invent and gave to the world to make sure that food prices continued to be very consistent and delivered? They invented the franchising system, right?
Ah,
America invented franchising, and they also invented mass production, and they consolidated purchasing power. Because if you go to the 1980s, right, you realize franchising was a very hot business because it solved a very big problem, and that was the inflation of food and food services. Right, that's why you see all these McDonald's, you see all these Wendy's, you see all these Burger King. They all started to take off in 1980s because that was the system, right, that was designed to combat inflation, right?
right.
And then you see Walmart, they also took off during 1980s. It's called concentrating the purchasing power so big so that the manufacturers, right, also have no choice to consolidate and then push prices down. That's why in the 1980s, the tech of food industry, right, it was that is better, that's faster, and that's cheaper was franchising. So that was the business model that makes sure, right, that inflation did not become a problem, right? So actually, now that you think of it, right, this is exactly what we're going through because I just gave you the story of the two bowls of laksa, right?
Yeah,
Right? Which one performed better and then better and cheaper? It was a franchise, right? All this
exactly.
like yeah, it was the franchise because I'm going to like put it out there, right? Basically, if inflation is going to be a thing for the next 10 years, I can tell you a lot of this food service delivery who basically has a very huge purchasing power is going to come back in style, all right? Because they are able to deliver a product that is at least three times better for 30% higher in cost. All right, because I've really witnessed it less than 1 year ever since like this inflation thing became a problem. All right, and then you're going to see, right? You're going to continue to see, right? In terms of food, right? If you cannot deliver, better product, right, for a cost that is reasonable, I can tell you that the next 5 to 10 years, you're going to see a very huge wave of franchising in the food and beverage industry that's going to happen. Because in order for you to win the inflation game, all right, America has proven the franchising model is designed to actually tackle inflation.
Right, that makes a lot of sense, and that's why McDonald's is like one of the most like inflation resistant businesses out there today, and it's known as kind of like Walmart. These are kind of like the defensive stocks, right?
Yeah, defensive, and I guess they were born out of necessity. It wasn't a business model that would thrive during the 1960s, right? Because it's like the 1960s was when like a lot of this like small medium enterprise, all these like mom and pop shops, they have like they know your neighbor, etc. Right? But then they couldn't compete once hyperinflation came because they were too small to have bargaining power against the manufacturer, right? So in order for these people to rise up, they had to unionize, or in this case called franchising. They had to unionize and then they grew so big that their purchasing power becomes so big, right? I think McDonald's, their purchasing power for potatoes is so big, right? That but the entire potato industry had to basically kneel before them and say, okay, what you want, I'll try to do my best for you because the purchasing power was huge, right? So, like, it's like consolidation like that. So it's like when you realize, like, what I do realize is that for every single time that inflation is a problem, right, there's always someone out there who will create a system to counter that problem. Because history has shown that we are very much able to solve that problem, right? And then businesses which are basically like designed to counter that problem are businesses that will thrive. This is the law of capitalism, one. If your business cannot survive based on this environment, your business will die. But if you are able to pivot, if you are able to position yourself to win against the environment, I say then better for you because you have no competitors, right? Correct.
Yeah,
So the next thing is this is why when I is also to prepare for the next question now. And the next question is, why is inflation good? Right? Why do you think is inflation good? Okay, this is a very philosophical question because every single time, right, when people talk about inflation, they always have very negative connotation. You go to the Wall Street Journal, you go to the Straits Time, every single time people talk about inflation, everyone thinks that the whole world will die, right? So why do you think is inflation good? Right? Maybe we'd like to chip in.
yeah. I would say like from our last episode, right, with like Azan and Cher, I've learned like how to frame how to look at like these bad things like inflation as an opportunity. And I'm glad to say that inflation, right, always proves to be like a great like driver for hike in like asset prices. So like as a retail investor myself, I would say like uh I'm preparing myself so that I can capitalize on like the next 2 years to get assets at like a good price, and let the stock prices do its thing in the next 5 years. But coming back, like why does the asset prices actually go up, right? It's also because like when the prices of these goods it goes up, it reflects on the revenue of the company, and that's why like when the revenue growth, and that's where you get like all the revenue growth. Yeah, of course, they're doing more sales and everything, but if you add in like an extra 10%, like that additional inch of like revenue growth, it does make the company look very impressive sometimes year on year. And that's why like inflation in many sense, right, it's a good thing for these companies that know how to capitalize on the markets, because like in the end of the day it will reflect on their revenue growth, not necessarily profit or profit margins, because whatever they spend is spent on like raw materials, it's also going up. But like similarly, like to McDonald's, if they do manage to consolidate their supply line, supply chain and everything, things can be cheaper for them and they could even grow their profit margin. So it really depends on like how the company navigates inflation. But a good CEO will use inflation to its advantage to further strengthen the company. And yeah, and from my perspective as an investor, that equals to good CEO equals to better stock price.
Yep. And this is what we call adaptability. Okay, I'll give you my input on why inflation is good. Um, okay, when you design a economic system for society, all right, the worst type of thing that you can do is to design a system, right, where people with talent, you lock them away from the potential to win people, right, who come from the right ovary womb, if that makes sense. Okay. And to basically like maybe like further strengthen this point is that if you have a society, right, where it spearheads nepotism, you only promote people within your family, within your blood, and you look over people, right, who come from humble beginnings, and you don't give them opportunity to win people who don't want to change and don't want to innovate, right? Then that is where you get a society, right, which is good game, well played. Because if this society is basically just focused on making sure that the people who have the luck to be born to royalty, right? And then just because you're born to royalty, you therefore don't have to work, and then you don't have to do anything spectacular in your own time, and then you don't give the people, right, who are not born into royalty the opportunity to do better, than those who have the luck to be born into money, right? And then that's where you have a problem. So the way to resolve this is called inflation. Why? Because inflation, right, as much as they say it robs your wealth, one thing it's very good at, right, is also it robs the wealth of everyone. And that means the wealthier you are, the richer you are, the more you don't actively utilize the good luck that you have, meaning using the money, right, in a manner that impacts society positively, the faster you lose that money and the faster you lose your wealth. So this is why I think inflation is good. Because in the grand scheme of things, if you zoom out and look at the big picture, right, the more money that you have, let's say Apple has $200 billion in cash, their opportunity cost to not use that cash 7%, 8% per year is $16 billion. That is something, right? The money over there will go to someone else who can use it better and to create a new business, to create a new opportunity, to create more value somewhere else in the country or somewhere else around the world. So this is why I say inflation is good. Because if you don't have inflation, all right, then those people who have the luck to be born in the right womb, right, don't have to work already. Then they forever don't have to do anything. Then, society will not change, right? So inflation is good because it forces people to spend money. Those people who understand that there's an opportunity cost, if there's an opportunity cost of holding wealth, right, and you need to utilize it, right, and to utilize it in a way where it stays relevant, where it stays growth, you need to like keep creating value. That is a system that will work for many people, right? So I answer this, right, from an angle of a societal design standpoint. Because when you really zoom out and you see this, right, inflation is good because it causes and forces people to spend money. Because the worst thing that you can do, right, is that you don't spend your money, you keep all the money, right, then you don't like do anything productive with it. And the worst part, right, is that when you go to like all this like like super like wealthy like gala event, a lot of these people like to show they come from whatever da 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 da. What you realize is that first generation money, right, and third, fourth, fifth generation money are completely different type of zest. First generation money, the way that they get there, right, is because they have to do everything themselves. They don't have the luxury of getting connections. They don't have the luxury of being of making mistakes. They don't have the luxury of like making all this. So they have figured out, right, to spearhead. If a person can go like from humble beginnings and then match the level of like royalty within their generation, usually they are people who understand they have a particular set of skills for that particular time frame, right, which allows them to capitalize on what society needs during that time. That's why they're worth so much, right? If you don't believe me, you can look at the entrepreneurs who manage to do it within their lifetime, right? Although they might not be like okay lah. So don't talk about Bill Gates. He's a brilliant entrepreneur in his own right, even though he came from a pretty well-to-do family. But apart from that, he also manages to like rise up because he's a great entrepreneur. You can look at his background. He's brilliant, right? He's a very smart guy. The person that maybe you can take more inspiration from are people like Steve Jobs, right? Because he came from a very humble beginning. He's basically an orphan. Not orphan lah. He's more like a. He's not orphan. He went to a family who basically raised him. Then from there he grew Apple into a company that's so big, right? So there are many stories are littered around history, right, where you can look at very brilliant entrepreneurs who started from nothing, and because they are in a system, right, where they rob the people who do nothing and then give it to the people who can produce something that has meaningful impact. That is why the system works. This is called capitalism, right? So when you ask me why is inflation good, right? Inflation is a very crucial component to make sure that if you hold cash for too long, eventually that money dies. Let that sink in for a moment. Because if you hold money for too long, and if you don't put it to use, that money deserves to die because you are not using it right for society, right? So having cash is important, right? Emergency fund, 6 months, 12 months. But you're talking about cash, you know, that is going to stay dormant, right, for the next and you're not using it, right? Then the rightful system to ensure that people like continue to innovate and push the boundaries, right, is that you need to have a system, right, where it's called a hidden tax. And the tax is called inflation. Okay, does that make sense? Because
Yeah.
that's my view of inflation, right? So like I hope that this answers like the question of why inflation is good, lah. Because a lot of people always say it has a very negative connotation, right? But it's important to look at the flip side because if you don't have inflation, then you basically get a society where nobody wants to do anything, right? The rich will continue to hoard the money, right? Then they will not spend, then they will not innovate. And just because they're born in the right womb, therefore they don't have to do anything. Whereas on the flip side, it's good because it forces them to do something, right? So let's go to the next topic, and that is when inflation is bad. When is it bad? So maybe Ryan would like to take this.
Yeah, inflation is bad. Like we talked about this like a lot since the beginning of the podcast. Things go up in prices. So like more immediately, more relative to me, I guess. Rents they go up. Asset prices also go up. But the bad thing is kind of like when your daily expenses go up, and then you would have to kind of like adjust your personal finances so that you spend less and you try to earn more, which is also very difficult in a economy that's recovering from COVID and everything. So yeah, we've covered like basically a lot of reasons why it's bad. And I guess like from a business point of view, right, inflation is bad mostly because again, like how we laymen, we need to spend more on goods. Companies also will have to spend more on goods. So it depends on like what kind of companies, I would say. Like let's say like a car company like Tesla or Apple, right? They have to spend more on the raw materials to make the phones, make the cars, make the batteries and everything. So it means more expenses. And if they aren't able to command like the same level of like price increase in their products, right, then they will be making less than what they did before inflation. That's why you will get like price hikes on like the iPhone 14 for basically the same thing as like iPhone 13, but $400 more expensive. So that's why this is what inflation does to you. And if like let's say they don't have like enough money to hire talent, right? They are firing people, letting people go because they want to reduce the headcount so that they keep their overheads low. It's okay if like let's say it's like where it's like a company where innovation is not too important. But when it comes to like innovation, right, the more people you have, the more ideas you get, the better the tech improvement is. And we clearly see that with like the iPhone 13 versus 14. For the same thing, the same chip, everything is the same except for like a few things. You get like a iPhone 14 that's like way more expensive there for no reason. And this is why inflation is bad. When you have all these additional costs, you can't keep some companies, they aren't able to keep the innovation going because to innovate also it costs money, and sometimes in many sense innovation is kind of like a luxury. It's only available to companies that demand strong cash flow. for them to continue innovating, because R&D is not free. R&D, there's a lot of try and error. Not everything you try is gonna, uh, not every project that you go into R&D will be a successful one. Sometimes you come to a dead end, and that's money wasted. So in an inflationary environment, um, innovation is a luxury. So yeah, that's why in some sense, for from the business perspective, inflation is a bad thing.
Okay, my take is something which is more nuanced. Um, when inflation is bad, I will say that inflation is only really bad, right? When a person is not prepared for it.
Or
Okay,
rather, not able to capitalize on it, right?
yeah, not able to capitalize on it, or or worse, right? Sometimes it is out of own personal doing. Correct. I give you a rare example. Okay, for those of you who have not watched this show from Netflix called The Playlist, right? I highly recommend that you consider taking that mini drama. Watch. It's a 7 episode biopic of how Spotify rose up and then like won the music industry or changed the music industry for that matter. And what you will realize, right, during okay, so you when you talk about inflation is bad, the music industry is a lot worse because essentially, right, in 2000, after the tech boom, right, in 2004, right, I think there was this company, not really a company now, there was this movement, right, called the Pirate Bay. You know, for those of you who, I'm pretty sure a lot of you knows what the Pirate Bay is. Like, it was this innovation, right, where it was born out of a peer-to-peer technology, you know, meaning like if you want like a brand new free like songs, right, you can just go to the Pirate Bay, download torrent, and then you can get the songs for free. Now Pirate Bay was something, right, which is definitely everything that an American wants, right? Better, faster, cheaper. And the thing that causes them to win a lot of people is the last point called cheaper. Why? It's very, very difficult to compete with free, correct? Because the old days is that if you want to buy music, right, you had to go to a music store. Then this music store had to like basically like number one, have the disc that you want. Number two, have the stock that you want. Then on top of that, they also charge you like $20, $25 just for you to buy that CD. So it was very physical. You know, it's something which very annoying because once you buy the CD, you also need to have a CD player, correct? You also need to have a lot of this equipment to basically just listen to this like song, you know. So the Pirate Bay took all of that, right? And then like basically made it free, you know, and then basically anybody around the world can just get any song that they want so you can go and download all these torrents. So the music industry was dying because what they realized, right, is that it's very difficult to compete with free. So what did they do? You know, in order to protect a typical like what you call old money thinking, right? It's okay, never mind, I'll sue you. That is their strategy, right?
Good
The
luck getting rid
strategy
of
is
Pirate Bay, ah.
the strategy is very simple. No problem. I will use archaic laws to sue the hell out of you, rules and regulation. So okay, they try to sue, but every single time, right, they come up with a lawsuit and then put these people in jail. Guess what? The Pirate Bay just double in size because the more they try to make it public, right, the more people realize they're more exposed to it, right? Then like there was a scene, right, where they say after they whack them with one lawsuit, right, the next day Pirate Bay shut down for 2 days. Then after that 2 days, right, their traffic doubled.
Yeah, it's free advertisement, ah.
Yeah, so it's free advertisement. So this is a very typical example of when inflation is very bad for all the wrong reasons. Because instead of looking it as an opportunity, right, these idiots is like a frog inside a boiling water like that, you know. It's like the water is boiling. It's going to like hit boiling. I said, but you're an idiot trying to like swim around thinking, oh, this is like onsen, right? And eventually you get fucked, right? So this is a very good example of how to look at inflation is bad because guess what? The inflation, the reality is right. People have already spoken. They don't want to pay for music. They don't want to pay $20 for that one song. So instead of looking at this as an opportunity, right? What they took was that they tried to protect, you know, their industry so much that they forgot how to learn how to innovate because it was a system that worked in the old times, you know. But the new times came, and guess what? Now you need to learn how to compete with free. Correct. So which company managed to solve that problem? Spotify. Correct. Spotify solved that problem for them. So Spotify also met with, so when you watch this like drama series, right, they met with a lot of problems from these music directors. So they need to hire like this lawyer, and then she managed to get all these like contracts. And then the way that they solved it, if I'm not wrong, I don't know because I haven't finished watching, right, was that I think they gave a portion percentage of Spotify ownership to the music industry. Then the music industry got no choice but to make sure that Spotify succeeded. But guess what? When they did this, the music industry came back alive because they have learned to successfully compete with free. And this is what I mean by inflation is bad. Inflation is only very bad, right? If you don't know, if you don't, number one, if you don't acknowledge that inflation is there, and you don't acknowledge that you need to adapt, and you don't acknowledge that you need to change, and you don't acknowledge that sometimes in order for you to turn this into an opportunity, you need to let go of very archaic old law beliefs, right? That is when you deserve to die, right? This is what Darwin, right, call natural selection. In business, if you don't adapt, if you don't change, if you keep holding on to the old when it's really not working, when everyone knows it's not working, especially when the young people are telling you it's not working, then your business deserves to die. Right? Because you need to change, you need to innovate. This is the spirit of entrepreneurship. The spirit of entrepreneurship is to always push the boundaries so that your customers and all your stakeholders get paid. And if you stop, the moment you stop thinking of how to do that, right, you are fucked and you deserve to get fucked. Right. So it's like there's only so much legal protection you can do. But once the pivot comes, right, you don't believe me, you're gonna look at all these companies and businesses who rose to the occasion and then provide so much value. Grab, they turn over Grab and Uber, they killed the taxi industry. Right. You can look at Spotify, they killed the Pirate Bay. Actually, Spotify was designed, right, to kill the Pirate Bay. Do you know that? I think a
Uh,
lot of you don't know. The
yeah.
Spotify, the CEO created Spotify to kill the Pirate Bay. A
Because
lot of
like
you don't know.
innovation like this, right, it always happens the other way around. You make things cheaper so that you can kind of like kill the more expensive things, the more inefficient things. But like for Spotify, it's kind of like the other way around. The company is created to combat free things, but in a sense, I guess it's not like free, right? It's illegal free. So yeah,
And of course, me and Ryan definitely have a very huge appreciation for Spotify because where else is this podcast being hosted at?
exactly.
Precisely. So like I think this is where like when they say like inflation is bad, right? Or, like this topic, I can go on and on and give you a lot of examples. I guess like end of the day, right? Inflation is only very bad, right? When it causes your time preference to shrink. Meaning, like for example, you used to be able to not worry about saving cash, for liquidity event in 3 years, right? For example, if let's say, okay, in 3 years I want to buy a house, or I want to get married, right? I need to set aside maybe 30K to get ready for the event. But if your money, right, is inflating at, let's say, you talk about some countries, some of them, right, their countries, the inflation rate is 50%. Right. Okay, this a lot of you are from Malaysia. What do you think is your ringgit inflation rate?
Wow. Officially cited, I think, let me see, officially cited, I think it's around 4%
Four
in,
percent.
wait,
Did I
let
hear
me
that right? Did
Google
I
it.
hear that right? Is it 4%? Is that what you guys are being told?
Well, looking at this, just a quick Google, it's telling me it's 4.7%.
Okay, so okay lah. Let's ask a Malaysian, Ryan. What do you think this is correct or not?
I think it's correct if they forgot to times 5 to it.
I mean, off tangent by a few multiples, I would say.
Yes, yes. At least
Because
5.
yeah, you don't talk about like just like all this like you don't just talk about the basic necessities lah. I would say like everything has increased by at least 20-30%. So
Yeah.
sometimes when they say inflation is 8% now, I say you're very lucky if you can find things go up by 8%. Correct. So apart from your income now, only your income goes up by 8%. The
Yeah.
rest of everything will go up by at least 2-3 times more. Right. So
Still end up
okay,
poorer.
so yeah, so like the thing is, right, inflation also causes obsessive optimism because for example, right, in I give you a old example, I give you a new example. The old example is that in 1923, there was this country, right, who went into hyperinflation mode, and that is called the Germans, right? Their mark actually increased, like the hyperinflation there was like super super bad. They were in bankruptcy, right? And people, right, actually thought they were getting like damn rich. Do you know that? Like during the hyperinflation environment, everybody, right, don't think their marks were getting shit. Everyone actually thought that they were getting like super rich. And there was this particular story, right, of this poor German fella, right, who bought an insurance policy like 20 years ago. And then he dutifully paid his insurance premium, right? Then during the maturity date, right, he could buy a loaf of bread with his maturity.
Oh my god.
Yeah, so that's a very like good example of like inflation that's bad lah, because like what you also realize in 2020 when there was actually like inflation that's not being recorded, right? People were actually in obsessive optimism. People were lining up to buy real estate. People were lining up to buy assets. People were lining up to take loans from the bank and then buy, right? Because everybody thought they were going to get rich. Now, what happens in 2, 3 years down the road is that people realize that money can also be called back, right? So, knowing this, my suggestion to most people is very simple, right? Understand how it affects your wealth, understand how it affects your cash flow, and then from there, learn how to strategically like navigate your way through lah. Which is why the next question is, do you think that inflation will ever go away? I think enough context has been shared so far about what on my view. So maybe Ryan, would you like to take it? Because I think you probably represent the. I think the thing is right. You actually probably represent the grassroots a lot better than me because of your current stage of life, and I think your views are more relevant. Lah. So what do you think? Like based on this experience, right? Because I think this is the first time you have seen inflation, right? So based on this, do you think it will ever go away?
I would say like my where I'm at my stage of my life, right? It's more similar to most of our listeners, lah. You know, my background is kind of like I just came out of like graduation 4 or 5 years ago, started working, and right at the peak of like the 2020 stock market peak, I started investing, and I kind of like lived through the last 3 years on a roller coaster, experiencing, you know, what does a an economic crash does to the economy, and more lately to your own life and your own wealth. So um I guess like with all this inflation going around, right? Like the first thing I realized is that inflation is something that you cannot control. So I spent like a great deal of like 2020 and 2021 obsessing about, like, you know, how is all this going to affect me at some time, and you know, it scares the hell out of me, and sometimes I cannot sleep, you know. And coupled like with the fact that I invest in like volatile assets, right? In the beginning, I'm not gonna lie, I lost sleep, you know. It's difficult to sleep, and uh sometimes some days I just don't want to talk about it, you know. It's depressing, but then in the end of the day you have to come to or for me, like, you know, in the end of the day I came to the conclusion that, you know, inflation is something that will never go away. It will happen regardless, like what we have mentioned just now, you know. For the US dollar, it has been inflating at like 7% annualized rate since the 1960s. And what is most important, like what Aaron mentioned, right, is that you sit down and you understand. But first, right, you have to acknowledge that it's something that is out of your control, and it's something that will never go away. And knowing this, right, you'll be more comfortable to factor in inflation into your wealth building strategy. So, you know, you would factor in inflation for assets, you would factor in inflation for your personal finances. You know, you will think about, like, in the next 2 to 3 years, will my rent go up? Will my daily expenses go up? And hence, that's why I need to get like certain amount of like income or salary increase so that I can be comfortable and grow my wealth. At the same time, you know, I want to allocate a certain amount of money, set it aside for you know, savings, or more importantly, investing, so that you know, you learn to live with inflation. I think, like, you know, people keep talking about, like, you know, living with like COVID, and 2020, we're all living in COVID, right? There's no mask mandates anymore, but everyone's still wearing masks. For inflation, it's basically the same thing. You know, you have to acknowledge that this is like a plague that will never go away, and what you can do is to wear a mask, you know, or in like a more financial or economical terms, right? You position yourself so that you're able to grow your wealth. At the same time, you try to keep your expenses low. So that's like on a personal finance level. But if you talk about like the more on an investment kind of like realm, right? You want to be putting your money into assets that counter inflation, you know, which I will get into a bit. But the first, but just to conclude everything what I've said, right, the most important thing is to acknowledge that inflation is something that is out of your control and it will never go away. So the best thing to do is to factor it into your plans.
I like what you say about not within your control, and that I think that stems from stoicism, right?
Yeah.
The attitude of stoicism, and that is don't focus on what you cannot control, focus on what you can control, right?
Yeah, you turn inflation into like an opportunity, which is like what we just talked about just now.
Yeah, because
No point stressing about it's bad and everything because it's going to destroy you anyway. So you better focus on like how you can avoid getting destroyed, or you can focus more on like how to build from there.
yes, and this is what you call adaptability, lah.
Yeah, exactly.
Everyone needs to learn how to adapt and basically live with it. A lot of people always say, "Oh, I'll wait until COVID ends, then I'll go and continue living my life." I say, "Wait, long, long lah, tang kuku lah." Right? Tang kuku lah, So it's like I think in terms of like inflation, right? I have never been in a any time frame where people always tell me that prices will come down in terms of like cost of living lah, because like I think we have given enough time, right, to the Americans and to and human society and civilizations across multiple civilizations which have killed, destroyed, pillaged, pilgrims, all these like people, the Romans have tried it, the Egyptians have tried it, the British have tried it, the Dutch have tried it, now the Americans are trying it, the Chinese have tried it. Guess what? Inflation will never go away. All right. Because people, human nature, right? It's not about logic, lah, all right? Humans have consistently demonstrated across multiple civilizations, right? When given a choice to deflate or to inflate, people always prefer inflating, right? Because when it comes to deflation, right, in America's short history, there was only, I think, a few times where they went into a period of deflation, right? One of the periods was during the Great Depression in 1929, where basically stocks, the S&P or the Dow Jones Index, are dropped by 90% in 1 year. 95% actually, to be exact. So imagine, right, within 1 year, your S&P 500 dropped by 95%. How would you feel? I see some of you are 30% already want to die already. I say talk about 95%. I think all of you GG. Right. 30%, you already see like all these like uncle, auntie already like flipping their shit already. You're talking about 95% drop. I tell you, even worse, I tell you. I think people will be jumping off the buildings. Right. So the thing is, right, if you have actually like spoken to people who've been through a period of deflation, especially the Japanese, you don't believe me, you go to Japan, right? You will see that it's a very, very bad like outcome compared to having a period of inflation, right? Because when we're talking about deflation, right, in 1930 to 1933, when America had deflation, right, prices came down 7% compounded every year. It was negative 7%. So prices went down. But the problem with that is that people didn't want to spend and people keep holding the money. So when people don't spend, businesses go out of business. And that is when you have what they call the Great Depression. When people don't want to spend, people try to save money, people are very selective of what they spend. Sounds familiar, right? This tone? This tone
Yeah.
sounds familiar, right? Right.
I
It
mean,
sounds like today, right? It sounds like
yeah,
today, right? Everybody is scared to spend, right? Everybody don't want to spend, right? Everybody all like, wow, very, very like what they call hermit mode, all don't want to spend, all don't want to spend. Guess what? This is called deflation. This is the feeling of deflation, right? And the thing is, right, a lot of the data that you see right now, this inflation, actually, right, I find it's delayed. Lah. Like personally, when I look at it, to me, this is like delayed data. Everybody knew that it was going to come. They were just not sure when it's going to come. So now that it's come, everybody say, oh, inflation, but actually everyone knew about it, lah, right? The question is, what is going to happen in the next 3 to 6 years, right? My take is very simple. We might go into a very temporary deflation, and this is what you call, last time they call it the Great Depression, this is called recession, right? So if we're going to go into a recession, right, people will stop spending. So in order for people to spur spending, it's very simple. That's the government job, and that's the Federal Reserve job. They have to re-inflate, right? It's always a tremendous cycle. Like every time when they inflate too much, you're like, oh shit, we inflate too much. Okay, let's take out some gas from the balloon. Too much already, too much already. Then once they withdraw already, right? Then everybody all humpty already, all very scared already, right? Then you start to see all these like companies start to go bankrupt. Then you start to see like property prices all start to drop. They're all scared already, right? Then they will progressively, very slowly start to pivot, right? You don't believe me? You can just go and read through history, right? This happened time and time and time again. The last time that this thing happened, right, was during the Paul Volcker in 1980s. During the hyperinflation, everybody was so scared, right? Paul Volcker come in, okay, one time good one, 18% interest rate. And that was the period, right, when he came up with the rolling 18% interest rate for bonds. That was actually the time, right, where if you are a bondholder, you take your money, you buy bonds, right, you outperform equity. That was the only time. All right, in the 200-year history of bonds, that was probably the only time. Even Jeremy Siegel himself also admit, okay, during that time, our bonds will outperform equity. He bought the bonds. That was the only time he actually bought bonds, right? So, this is why I say, like, will inflation ever go away? You come back to this topic, right? The answer is, right, if you study history long enough or you study civilizations long enough, right, it will never go away, lah. Okay, because like I think as what Ryan said, it is very important, right, that you just acknowledge that it is a plague that will never die. It's like a cockroach that will never die, lah. Okay, but the good news is that if you look at society as a whole, right, having it not go away is actually more of a good thing than a bad thing, because if you actually measure the standard of living, right, um for inflationary environment. You don't. That's why I say it goes back to the point. It's okay to print money if you can use that money at 10x, correct? But if you print money and you don't 10x, your civilization don't use that power, and then you 10x utility, that's when you're screwed, right? That's why they always say America has a system, right? And when they say they have a system, what they really mean, right, is that they have a system to utilize money, right, and then give it to entrepreneurs who are able to do things better, faster, cheaper, right? So when you talk about things like that, right, that's when I realized that learning to live with it and acknowledging it that you have no control is a lot better than worrying about it, as what Ryan has rightfully mentioned. All right, and that actually brings us to the next question, and actually is assets that can counter inflation. Now we're going to do the good stuff. All right, let's talk about assets that can counter inflation. Ryan, what do you think about this?
Yeah, like just now we mentioned that inflation will never go away. So the best thing to do is to position yourself in like assets that counter inflation so that you can keep building your wealth. So in my opinion, right? This is my opinion, it's not financial advice, but assets that counter inflation are basically assets that innovate, basically like how we mentioned in the last hour, basically, like how McDonald's they consolidated the supply chain and increased their buying power on like potatoes and franchising. That's number one. That's innovation in the 1960s. 1960s, right?
It was Paul Volcker, 1980s.
90,
1980s.
right.
Yeah.
And and more in 2000s, that was like the internet. 2010 social media, and now we've got like electric cars, sorry, and also like mobile phones, and electric cars. So um you know the best thing that I can think of are like assets that make uh things like cheaper, faster, and better 10 times more, or even more. So like Tesla, right? And then there's also like from a more monetary side of things, that's crypto, which is even better because it's designed to have minimal inflation at all, Like for from what I remember, from the last halving, there's only effectively a maximum 2% of inflation over the next couple of like 400 years, I think. So it's, in my opinion, it's best that we can position ourselves in like assets that number one innovate, make things cheaper, better, faster, and then again, like cryptocurrency, these are like monetary systems that are designed to minimize inflation. It's just that Bitcoin has this also this element of like innovation with it, where it's making transactions much better, where it's immutable, it's fast. It's not necessarily faster, but if you take into account like things like with like the Bitcoin Lightning network, that's fast. Or, and especially if you want to transfer your money overseas, that's way faster than going through the foreign exchange.
And
So
significantly cheaper. Just to give people a illustration, I just moved some Bitcoin out from my wallet. Do you know how much that costs for final settlement in less than half an hour?
probably less than $1, right?
50 cents.
Let's go.
Try to do that in the financial system, you die.
Nah, man, you have to go to the bank, queue up. Oh, I forgot today is Saturday. They don't open.
Yeah. So just to give you an example how fast and how cheap it is. A lot of people always say it's expensive. It's not.
No, it's
I've done
not.
it for less than 50 cents. Okay, continue, Ryan.
And it's also more secure. But thank you for bringing that up. So the best kind of like assets in the realm of like stocks and cryptocurrency, right, are the kind of stocks and tokens that exhibit innovation. And and it's not just any kind of innovation, because like let's say if you ask me to invest in the metaverse today, right? I'll tell you what kind of problem does it solve, right? Aside from like now the main proof of like concept or like that it has is the gamification of things where they are able to make games more realistic and it's cool that you can have like gloves that will send like sensory like touch the feeling of like touch that additional level of sensory into and but there hasn't been like any proof of like execution in terms of like innovation in real world problems. So it's mostly still a gaming thing. It doesn't solve a problem yet, but like well, I'm talking specifically about like problems like that are being solved like more cheaper, faster, and most importantly more convenient. And in the past, like things like social media has proven to be effective for marketing and connection between people, communications. And speaking of communications, we have like mobile phones, which later evolved into smartphones that made like a lot of the laptops obsolete. So not to say obsolete, like of course when you work you still need your laptop and whatnot, but nowadays people don't you know people turn on their laptops for work, not really like YouTube and stuff like that to watch a video and all that. So I guess my point is that the best kind of assets are assets that exhibit um innovation where it makes things cheaper, faster, and better with more convenience. So that's where you want to put your money, or you want to bet your money on stuff like this, which are so-called inflation proof.
Yep, I agree. Like there's many different types of way where people fight inflation over the years, right? If you talk to like your parents, they always tell you, this they love two things, right?
Go,
Number one, they love gold. 越多越好 ring
恭喜发财啊！
恭喜发财 gold they love gold. Right? Chinese people, 财神爷 they love gold ingots everywhere. Okay, the second thing that Chinese people love and this Asian people love is called 你要买房间 to go and buy your real estate. Right, these two things are what you call old assets that relatively counter inflation quite well back in the day lah. Okay, whether or not they continue to counter inflation, I not so sure. Okay, because the fact of the matter is the world does change and evolve. Right. People might argue, okay, look, Aaron, the rental price have increased is proof that it is inflation proof because it increased more than inflation. To a certain degree, yes, right. But that is only if, and that is only if your talent, right, has no other alternative but to stay in the country that you're in. Okay. I can safely say with a high degree of confidence, right, that in 10 years, if you are banking on the fact that your asset is basically inflation proof, right? Because people got no choice but to stay in the country and pay for it, right? I think you're going to be in a very bad future because I think in 10 years from today, right, people are going to have options to travel wherever they want. All right, because I'm already seeing it happen already. I'm already like seeing it happen in grassroots level. People are really getting fed up, right? If they're not able to achieve what they want, right? They're really pangkang, they're really like back up and then they go somewhere else. All right. And I don't think that is going to stop anytime soon. Right. Because this has been proven that people eventually they only reach a certain point, right, where they have so much faith inside their politics, right, where they basically just vote with their feet. All right. In Singapore, we have a lot of foreigners. All right. We have a lot of migrant workers. And the reason why they came to Singapore is because they vote from their feet. There's not enough opportunity back home. Therefore, they came to Singapore. They can seek a better future. Right. So if you're real estate a person, right, and then basically like you believe, right, that this particular asset class will protect you from inflation because this place is so good, right? I think sometime you do need to take zoom out, right, and take a look at whether or not the sustainability of the idea is really there. Because I think the important fact is you need to acknowledge that in the next 10 years, right, people can be going back to their kampong, right, and being and earning a first world income because it's already starting to happen, right? Which is why when you talk about assets that counter inflation, right, I'm not a huge fan of real estate because I see the future. I think there's a limit to how much protection you can give. It was demonstrated that it was a good hedge, all right. But whether or not it will continue to be a good hedge, that is another question. Because for those of you who have stayed in condos that are How many of you, raise your hand, still stay in condo if you're renting that is older than 10 years old? Ryan, how old is your condo now?
It's brand new.
It's brand new. Would you want to stay in a condo that's 15 years old?
No, man.
Yeah. So here's my question to all these people who buy real estate. Do you honestly think, right, that people who rent, especially those with money, because when you rent, usually you're serving people who rent some money. Do you think they want to stay in old condos? They won't. Because people who have experienced renting, the moment that condos hit 15 years old, right, guess what? 15 years is enough time, right, for someone around your kampong area to build a brand new condo.
Yeah,
Okay,
it's
it's
more than
enough
that.
time. It's
That's
more
more
than
than
it's,
enough. You can
it's
build
more than enough time.
three condos like that
Yeah,
in
you can
15
build
years.
more. I said in 15 years, it's enough time, right, for someone, right, to actually build a brand new condo just beside you. Okay?
Yeah.
Enough time, enough time. Okay, government move very slow, but not that slow. Okay? Enough time. Okay, let's talk about Go. Go, in my opinion, still has a place in the portfolio. All right. But the problem with Go, okay, is that it has been proven that during the legislation time, right, that it can be frozen because that was exactly what happened to America, right? A lot of people they held Go, they protect the asset. Then overnight, the government decide to say, okay, now when you hold Go is illegal, therefore we have to seize everything. Right. And that actually happened to not just America, but a few other countries. I can say that about America because America, they have free speech, right? I cannot say about other countries because I don't want to end up in jail, right? So it's been proven, that they can and they do have the power, okay, to basically seize your gold. All right. So therefore, when you tell me that gold is a counter against inflation, not exactly true, because when you look at the history books of World War II, let's say talk about World War II, right? You know what assets help best against inflation? It was goods and services. It was basically things like hard assets. I'm talking about things like bread, things like rice, things like oil, cooking things that you can eat. Those help inflation the best during periods, right, where things were so scarce, right? Things that give you like the Maslow hierarchy, the most basic one, those are the ones that hold a lot of value.
Things that
Right? Things
solve
that
problems, right?
things that solve problem today. Because when you have an inflationary environment, what people want is that I want to solve my problem today. I don't want to
I
solve my
want to
problem
eat
10 years
today,
from
man.
today. Yeah, I want to eat today. I need to eat, then I can survive. So it's like
I cannot
survival
eat
things.
gold.
Yeah. So, right. So it's like when you think about stuff that will counter inflation, I agree with Ryan in that you need to have a framework, right, of three things. It needs to be better, it needs to be faster, it needs to be cheaper. All right. Okay, when we say cheap, all right, when the concept of cheaper, this is where a lot of people like it's very clear when you say better is better, faster is faster, right? Talking about time. But when you talk about cheap, right, a lot of people seem to have a misconception that cheap is not just about price, but in terms of time as well. All right. So what I give you another, I take an example from Spotify. Why did Spotify win Pirate Bay in terms of music? Very simple. Because so you just think in the back of your head, right? How are you going to get the music from the Pirate Bay? You
You
need
have
to go to your
to.
computer, right? You need to type in, go to thepiratebay.com. Provided you can find a link that works, okay? A mirror site that works. Provided it's not being blocked by your service provider. You go through a VPN, you go inside the website. Okay, you go to that website, you type in the music. All right. Once you type in the music, you get a look. Okay, there's a list of torrents that's out. All right, 500 torrents for that one music. You need to download the torrent that pretty much can give you, provided that the torrent that you download don't have any virus. All right, you need to navigate through a lot of pornographic advertisement. All right, so it's not child friendly. All right, and then after you download already, right, provided that your internet connection is good, all right, you download already, right, then you need to take that song, and then if you want to play on your phone, you need to take that song, go through that shitty iTunes app store, and then transfer it to your phone. Okay.
Yes.
Once you transfer that in your phone already, you sweet already, right? Happy already, right? Okay, then you can take your earpiece and you can listen to the song. Or provided that the torrent and the song that you download is not corrupted.
So
All right.
if you take all that time, right, let's say you do that successfully.
Half an hour for one song. Let's say one album. Okay, one
Oh my
album.
God.
The whole process at least 1 hour. Okay. Let's look at Spotify. Why they are better and why are they cheaper? All right. The cost of that in terms of cost for the Pirate Bay is your time. You're paying 1 hour just to get that shit done. Go to Spotify. Alamak, today I don't know what I want to listen. Okay, show me recommendation. Okay, play, done. That's it. How long does it take? Less than 5 seconds.
Yeah, exactly.
So this is why it's cheaper. So when you look at things that's cheaper, right? All right, you cannot just see in terms of function of dollar. You also need to see in terms of time because, as they like to say, time is money. Correct. So when you look at assets that counter inflation, right? A very good example of why I like Bitcoin so much is because the time cost when you talk about cheaper, right, is so much easier than the legacy system. Have you seriously, if you're a foreigner, you try to open a foreign bank account in any country, it's a hassle. I tell you, As a Singaporean, I try to open my own business account. It's going to take me at least like God knows how long. I need to provide so many things. I need to strip naked for them to see everything. All right, and I'm a Singaporean now, trying to open a business bank account. It's like so damn difficult. So I cannot imagine you're a foreigner how difficult it is, right? So, like when you talk about like all these things, better, faster, cheaper, right? Assets that you counter inflation, usually what you'll see is that a lot of these ideas are they have a track record of consistently getting attention, right? And they have attention because they have managed to solve some level of pinpoint, in that particular time period that people hate a lot. All right. So if you don't talk about Tesla, okay, why did Henry Ford become so successful? Because during that time, right, if you ask the average consumer, what do you want? I want a faster horse. They don't tell me I want a car, I want a faster horse, right? But Henry Ford solved the problem because horses back then, number one, horses die. All right. Number two, you need to upkeep the horse. Number three, horses are slow. And number four, horses are unreliable. Right? You need to hire a lot of logistics to solve that thing. Whereas a car, you put in a gasoline, right? You can drive the car. Right. So that's a very good example of how during that time, right? How during the time he managed to solve the issues. So like banging on this fact, right? When you choose an asset, okay, I think this is where a lot of people have a lot of misconception, right? When you choose as an asset to protect against inflation, you cannot use the past as an indicator that this shit will continue to work in the future.
Yeah, I love that. Cause like our parents in our parents' time, they experienced like the country's development. Basically the whole world, it's still developing. There's a lot of innovation going on, like the internet, the mobile phone, and like for Malaysia, back 20 years, I think probably same thing in Singapore. Like 20 years ago, development of like townships is still relatively new. And that's why you have like a lot of developers which are very successful back then. But come to today, right? There's a lot of townships built and like there's more and more coming, but people are losing their buying power. What happens? There's more and more ghost townships. There's a lot of empty lots. And that's why like what Aaron mentioned just now, right? Like renters can afford to not rent in apartments that are more than 15 years old, because we have more choices than ever. We can choose to rent at a place that's brand new, that's like 2 years old. If I don't like 2 years old, there's still a lot of options out there which are brand new. And it will cost what and this goes back to supply and demand, right? It goes back to a lot of like empty lots. Even like for the same thing, if you say you don't want to take like retail consumer rental, you take like the like shops lots and everything, right? There's also a lot of like empty lots, empty shopping malls, empty office towers. So in the end, now like we're headed like 20 years ago, the supply was the demand was much more than the supply. And nowadays it's 20 years later, it's like on the flip side. And for the case of Singapore, I can't really speak for it, but if I'm not mistaken, the government has like a very good grasp on the property scene where they control the supply and demand with HDBs. Basically, they tear down old HDBs, they build new ones, and the supply and demand is regulated. But like for specifically in Malaysia, right, it's not. And all these townships, they pop up like mushrooms after a rain. And that has been happening for the last 20 years. It's getting more and more difficult to sell to the point that they have to give you cash back, or not enough, I'll give you free furniture. Oh, not enough, maybe I'll give you zero down payment. Oh, not enough, maybe I'll just throw in a couple more at like low interest rate or whatever. But in the end of the day, what they do is like they hike up the prices behind your back. So yeah, it's a bit counterintuitive in the sense that like to say that property nowadays it counters inflation. Maybe it doesn't. Today the economic environment is not the same as 20 years ago, where people the population is still growing relatively faster. People nowadays, we just want to have like one two child. Some of us like me, I don't even want a child. And it's getting more and more popular. If you want to take a look at a future, a good mirror would be Japan. People don't want to have children over there because it's too expensive, and that's going to be like I what I believe is like it's going to be Malaysia in the next decade, because it's getting more and more expensive to have a child. You have to send them to school, you have to find them tuition, milk, everything is expensive. Like and it's just so difficult now. Nowadays, like in those days, 6,000 for salary is a lot to go around. You can buy a house with 6,000 and still live a very good life. Nowadays, 6,000 is just barely enough to live a good life in KL, So how and the best part is like the salary is not going up as fast as the asset prices. So and your goods, so like how do it's stripping off people, robbing of their buying power. So like, inflation in a nutshell, like how you can't really the base case for buying property, right, is that it's inflation proof, but the economic around it today suggests that it's not. Now circling back to gold, right, again, I just took a quick Google. For the last 10 years, the price of gold has stayed the same. If you compare that to the US dollar, so like it's counterproductive to really say that, these gold and property is inflation proof in today's economic climate. I will give it to our parents' time. Definitely these assets have been proven to be effective at that point in time. But like as what Aaron says, right, inflation is kind of like an evolutionary thing where you need to adapt. Different times has different economic situations, and it calls for different solutions. So it's best that you keep your eyes forward and look into the future, because you don't drive looking at the back view mirror, right?
And that is one very famous quote by Warren Buffett that I think a lot of people don't seem to grasp because they always don't seem to understand that in order for you to find a solution, you only can do that, right? Looking ahead and not in the rear view mirror, especially when it comes to investment and asset returns, right? For example, I give you a very good example, which will link to the next question, right? Is that do you think that in the next 20 to 30 years that the number of programmers who can code will increase or decrease, right? It is going to increase because we are going to leap forward into a tech era, right? So a lot of things that you do today, right, might not be relevant in the next 20 to 30 years. And if that is true for your own, two hands, right, what's to say when in terms of assets, that will continue to be true as well, right? So I think it's very important that when you like choose an asset to counter inflation, right? Because the truth of the matter is, or me and Ryan have consistently said, you don't believe us, go and listen to our first episode and second episode, first and the third episode. Fiat standard and the Bitcoin standard, right? We started with like two like biggest the two our biggest idea in terms of like going forward for the future to counter inflation, right? And that is you have to look forward in order to place your money in asset, which you number one, you must know the asset, right? Number two, you must be comfortable with it. And number three, most importantly, all right, you must have that insight after you've done a lot of homework to believe that you'll counter inflation. So although real estate, some certain places the economics might not look good in certain countries, that might be the best option that they have, lah, right? Um so I think it's important that you have your circle of competence and then you maximize it, lah. But I think that actually goes on to the next like topic, right? Which is how to best personally, how do you best prepare yourself for inflation? So I will answer this later because I do want to hear Ryan's thoughts because I think he belongs to the category of the age group of most of our listeners who are like right now, after the whole like parade is done, right? Now all of you are basically like in your late 20s to early 30s. You're very worried about it. So I want to hear Ryan like how do you best prepare yourself? Because I think Ryan, right, over the past year that I've been speaking to him, what I love about Ryan, right, is that he doesn't wait for things to happen. Ryan is a person who tends to be a person who is very forward thinking. He will make sure that he go and like look for things to do instead of waiting for things to do. All right. So that's why I like about Ryan. So maybe you learn to talk about that. How do you best prepare yourself for inflation?
I guess I should start with like the concerns I have around inflation, but it's mostly cash flow related. The asset prices and everything. Right? I think if you go into your investments with a mindset of like you're going to invest for the next 5, 10 years, long term mindset, right? You won't really care about like how it fluctuates today and tomorrow or the next year. And that mindset has helped me navigate through the recent crash, basically. But um for like everyday inflation, right? You concerns and basically concerns, right? Like my cash flow, like over the last year, I have seen it like starting to like kind of like weaken basically because everything has been going up in price. So the best thing to do, right, is to improve your cash flow, in my opinion, for like navigating inflation on like a personal finance level. So the rule of thumb for me basically is to increase your salary or your income, and then at the bottom line you minimize expenses. So how I went about it was basically I started to reorganize my personal finances first. So but this year has been quite eventful for me lah. So I moved out, so that's like additional expense I have to rent, so that's a new kind of expense for me, you know. I've been quite lucky because I have been staying with my parents during 2020 and 2021. So I had a lot of chances to capitalize on like markets. But nowadays, you know, I need to pay rent. And so that my savings rate, you know, went from like solid 60% to just 20-30%. So sometimes if I spend a little bit more, I don't have like any more to invest. So it inflation has been tough, you know. My savings rate has been going down. So the first thing that I thought of is to reorganize my personal finances. So I kind of like restarted budgeting. You know, I will admit that I'm not the most I'm not the kind of guy that's like really financially wise. I spend I not to say like overly frugally or lavishly, you know. I do spend when I need to lah. And sometimes like when it comes to like the home improvement stuff, I can go a bit extra because like I like my kitchen. So I like to cook. So I like all the nice kitchen gadgets like a steamer, like a air fryer, you know. Sometimes I do pay for that, and it's like kind of like cheaper than what you would need to pay for in the last like 5 years, but it's still expensive, right? So the first thing I had to learn was to curb my spending. So I tracked my spending and everything. So that was good, you know. I was able to track down what were the bad habits. So I found out like, you know, I spent way too much on beer and way too much on potato chips. And did you know, like Lay's, right? The potato chips, they went up in price like before everything. It was 12 ringgit. Nowadays, you
Wow, that's damn expensive, like 12 ringgit.
yeah
I
yeah
mean, I
yeah
mean,
yeah yeah.
dollar to dollar, like, wow, that's like, wow, that's
Uh,
expensive.
yeah, but like yeah, that's like the bad habit I have, right? It was already bad before the pandemic, you know, and then after the pandemic with inflation, guess how much?
I can know what 15 at
Yeah,
least. I
yeah,
don't
yeah,
know.
15. And then like the good ones, right? Like recently they just rolled out like the truffle flavor one. That's like 18 ringgit, almost 20 ringgit for a bag of chips. So
That's
like
expensive.
yeah, it's crazy. So you know, by tracking my spending and everything, I found out I spent way too much on chips. So what I did was like you know, try to ease myself into like eating less chips, and eventually I don't buy it anymore. But as a first step, you know, I buy like instead of like the 15-16 ringgit pack, like the big ones, I downsize to the ones that are 4 ringgit. So that's like
Wait. The four
one
the
for
4 ringgit one you mentioned which supplier is curious. Mr. Potato.
yeah, 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 Mr. Potato.
Yeah. Actually, to be honest, right, I actually prefer this type of like home local brands. Like even for myself lah. In Singapore, we have $1 potato chips.
Oh damn.
Actually, yeah, we have like one. So dollar to dollar in terms of snacking, actually Singapore win lah. Okay, like in terms of price, because there's this like a $1 potato chip in Singapore that's actually by NTUC Fair Price. Yeah,
It's
so
like
it's
your
like
local brand
it's a unionized like type of like supermarket lah. That's why like Singapore we always say like our price don't increase lah. It's because the biggest supermarket chain in Singapore is actually NTUC Fair Price, which is a union based type of like supermarket. So it's like they control the prices very very tightly. And then
Nice.
so they release like this potato chip which is like only like $1, so everybody can have a snack.
Wow. Hey, that sounds amazing, man. It's like one $1 chips. Yeah, but like nowadays, you know, like I just spend on like 4 ringgit per packet chips. So I effectively reduce my spending from like 16 to 4. That's like 75% on chips. So that has been amazing. I stopped drinking beer at home. Which was helpful for me to clear my mind and everything, you know. And made me a healthier person, you know. So I walk out of that like win-win, you know. I save money and I became healthier. So like I'll say it's like quite good to track your spendings lah. So that's number one. And number two is to kind of like review the kind of like recurring payments, right? So like things like your phone bills, things like your um subscription to Netflix or Spotify, or like more or the most important thing of like monthly payments is like your debt lah, basically like your home loan or your hire purchase loan. So do a review of that, and if you are able to kind of like cut it out, then it's good. You know, some subscriptions you actually don't need them. Phone bills you can opt for like a cheaper plan. And then for me, like my hire purchase loan, you know, I've been going about trying to reschedule it. So like in Malaysia, I think they don't call it refinancing, because refinancing is only for like the home loans, mortgage loans. But like they call it rescheduling here in Malaysia. I'm not sure in Singapore what they call it, but I've been talking to my bankers to see if they can help me out. And if I manage to kind of like stretch out my loan to like say like by twice the remaining months, right? I can effectively reduce my monthly payments to the car by like maybe 40-50%. So you know, that all helps in the grand scheme of things of freeing up cash flow. But what is important is that when you free up all this cash flow, right, you set them aside into investments that we mentioned just now, that can counter inflation. So it's mostly about like organizing your personal finances. And on the flip side, on the upside, right, like this is all like reducing expenses, the one what we mentioned just now. So like it's also a pretty good time to go looking for a job or asking for a raise that pays better, like basically. You know, you increase income and then you decrease expenses, then you free up cash flow so that you can invest better and more. So you'll be able to capitalize on the opportunity that presents itself in the form of inflation. So yeah, that's how I think I've been going about it lah.
And that, ladies and gentlemen, is why I enjoy working with Ryan so much, because he's a recovered alcoholic. No lah, joking, joking. But I think like you know that's why I always say, right. End of the day, people do need to learn how to adapt to circumstances lah. Like, so when you say like how to best prepare for yourself, because when you talk about one component, which is your assets, right? There's, I think everybody has like two main categories of assets they need to protect. The first type of category is the one that we mentioned, and that is assets that stems from your wealth, right? You're talking about things like the fixed assets you have, the cash you have, the investments that you currently have, your net worth, lah. The one that is, like dormant, things that you save up over a very prolonged period. That's where you need to learn how to protect it against inflation. Then the other type of thing where you need to know how to protect is your own two hands, the work that you do, the work that you produce, and essentially to make it simpler, right, is to protecting your time against dilution, right? Because what I like about Ryan, right, is that he tends to be a person who will always, he's quite like he knows that like inflation is a thing, therefore he always wants to ensure that he gets his time and his money and worth lah. So he will always ensure that he always like look at it. Then there are people who will always look at it but then they never act, right? Ryan is different. Ryan tends to be a person who will act. So that's why I like working with him, right? So when you say like best prepare yourself for inflation, what I'm suggesting to most people is that the thing that inflation can never take away from you is your time. Because your 10 second today, right, and your 10 seconds 20 years from now is the same amount of time. But how much you can turn that time into opportunity, right, is very drastically different, right, in terms of what you are worth today and what you are worth 10 to 20 years later. So the best way to protect yourself is to, what I like to say and what Warren Buffett likes to say, is to invest in yourself. Because that is something, right, which you will never ever lose to political whatever political manipulation apart short of if we ever advocate in a very sway time of slavery again, okay, which I don't think we will, lah, right? But I personally believe that the best thing that most people can do, right, is to invest very heavily in themselves. All right. That means, right, learning how to upskill, learning a new skill set, learning to stay relevant and adapting for the next 5, 10, 15 years ahead. And to make sure that you're still as relevant 10 years from today, that is something that you need to always consistently do as you start to age. All right. I'll give you an example, right? When I was in a grassroots in the last 2 weeks, right, I speak to a lot of my like old buddies who I've known since I was like 20 years old. I can tell you, right, the very vast majority of them have it in them, right, to realize that they need to upskill and they need to change their way of doing things and the way
Yeah.
of doing things. In the last 10 years, a lot of them, right, have very good careers. And guess what? A lot of them, right, started to pivot into something that is future proof. I've seen that, right? Because the Singapore government is very good at that. Singapore government, our only natural resource is human talent. So we're very good at upskilling, right? Okay, you get a job, you get a job, you get a job. Singapore government is very good at that one. If they always say, right, during a recession, the first creators of job in Singapore is our government, right? Because they will have a lot of contracts, they will have a lot of incentives to basically get people, right, who is in the mid-career switch, get them in, right? Then we pay them a monthly salary to go to school for 9 months. So a person, right, for Singapore and like mid-30s, maybe mid-40s, maybe his job very jialat one, right? He want to upskill. Let's say he want to go and do a programmer or coding, right? The government will give him 9 months of pay, let's say 3 to 4,000 Sing dollars a month, right, to go to school. Then after that 9 months, right, he will be sent to attachment to a company in tech. It can be IBM, it can be whatever tech or government stat board, whatever, and then he'll get a job over there inside that role. And this is without any experience, right? So that's why a lot of people say, right, the government is so good. Actually, you think about it, I don't think any other country, right, has this type of incentive apart from Singapore,
Yeah.
right? So
Well, how I
Singapore
wish
actually,
Malaysia and stuff like this.
I tell you, Singapore, you guys are bloody. I say Singaporeans we're bloody spoiled to death. I say we have a lot of opportunity for you for people to tap on. The government will always make sure, no matter what is your potential, you will make sure that they squeeze every last drop of talent out of you. All right. So I'm very grateful for that. But there's also a very good example, right? Assuming, let's say, you don't have the blessing to be a Singaporean. All right. Let's say, unfortunately, in the country, that you're in, don't have such opportunity. But I think it's okay because I think right now we live in an era where you are able to go to any education system in the world and learn a new skill set. All right. I am a very good example. I knew nothing about computer science 3 months ago. All right. Then I decided then and there, okay, enough is enough. I need to learn computer science. I went to Harvard. All right. And I signed up for CS50. And I'm very proud to say today I can code right now. I can program right now. I might not be to the level of Mark Zuckerberg. I might not be to the level of Daniel Ek and his coders who created Spotify, but I know enough to make an informed decision on whether or not a person coding abilities is good or bad. Right? I can read
Yeah.
code right now. Right. So this is a very good example. And by the way, I'm not very young. I mean, like coming to my mid-30s already. Right? I'm not that young. I'm still able to do that. So this is a
Wow.
very good example, right, of how you need to continue to stay relevant and invest in yourself. Because if you invest in yourself, no one can take that away from you, right? You don't know a skill, you want to know a skill, right? I say you can just go online and learn. I say it's so easy these days to learn a new skill set. You don't have to pay like 20K, 25,000, $30,000. In fact, now there are avenues where people actually pay you to learn, right?
Yeah, exactly.
To basically like learn a new skill set, develop yourself, create your own like things. So when they say like how to best prepare yourself for inflation, in my opinion, the best way is to always consistently invest in yourself. Invest in your skill set, invest in your future, and make a huge bet on yourself. Because no one on earth, from what I see, right, will care as much as your future as yourself. They can only give you opportunity, right? But the one to take the shot cannot be someone else. It has to be you. You need to take the shot.
Yeah, you are in control of your life.
Precisely. So when opportunities come, my take is that assess and take it. Because I think like I think like when it comes to like taking shots, right? I have been consistently always taking shots in my life. Whenever there's an opportunity for me, right? I tend to be on the side where I will just take it. Because when I started from nothing, right, I didn't have a lot of options in my life. Okay, I didn't really have options. I didn't go to an Ivy League school. I didn't like graduate top in my class. I don't have anything of that. So when I step out into the working force, full time at the age of 21, I had nothing. So whatever opportunity they come to me, right, Very rarely I turn them down unless it's like pure slavery lah. Okay, most of the time I'll take it, right? Because to me, it's very simple. I'm only going to be young once. If I don't take it now, I don't want to be at the age of 30. I regret. So my way of looking at opportunities, right, in preparing for self for inflation is to when opportunities come, have confidence in myself that I will be able to overcome problems. That is something, right, which I think most people need to have in themselves. Yeah, that's how I look at it. Lah. So that's like how I'll wrap it up. It has worked for me in my life. I most of the time when I look at issues and problems, right, the most important thing is that I have enough confidence in myself in that I am being able to, that I have a skill set to be adaptable to situations.
I really like how you put this, right, is to kind of like upskill yourself, in the sense that kind of like future proof and be courageous to take on new opportunities. Because but like to scale things down, right, it doesn't have to be like a very huge you don't need like a huge problem or revelation to start upskilling yourself. You don't need like a $1 million idea to start building your own business. It could be something that, for all you know, it's just like a pain in the ass for you every day. So, like for an example, right, it's kind of like me learning how to program. I do like data analytics on a daily basis. So, has been increasingly difficult to do this in Excel, and time and time again in my work, right? Like a lot of people have given me enough uh evidence that Excel just doesn't cut it. We need something better. So in the end, I started learning Python, and I'm doing things like better, faster, and or cheaper. Because Python's like free. I don't need to spend on Excel. So yeah, in the end of the day, like how we talked about like assets that counter inflation are better, faster, cheaper, in the sense that it saves money and time. I guess you could go about like all this upskilling of yourself, in the sense that you are also solving a problem better, faster, and cheaper. Because like in the like what I realized today is that if I, like an average Joe, I can learn how to program, um uh and apply it to my work successfully, right? What will happen is that like programming, it will become like the norm in the future, and whoever who doesn't know how to program will be at a disadvantage. So if you are in a line of work that you can apply programming, then it wouldn't hurt to give it a shot to make your own life easier. Because like what you'll find is that sometimes if you manage to make things happen faster at work, you free up time. So number one, you could reclaim some of time for yourself at home to relax at night. Reclaim your evenings, or weekends. That's that is what learning how to program and making things, automating things, has done for me. Or in a more capitalistic environment or like company, right, when they realize you can do things better, faster, and cheaper, your value goes up. So you'll be up in the running for promotions. You'll be up for the running for like a salary increment. So it doesn't hurt either way. Because in the end, if your company doesn't value your efficiency and your improved skill sets, you can always go to another company that will appreciate it and pay you better.
And that is how you inflation proof yourself. Yeah.
Yeah, exactly.
You always like position yourself lah. Like a lot of people always like tell me that they worry about this, worry about that. I always tell them, look, say a lot of things that you're worrying about is not something that's within your control. Correct. The only thing that you really have in your control is today. What are you going to do today to like improve your potential? Right. And that is something which I think many people seem to forget lah. That behind every successful person, everybody is a 15-year overnight success, right? It takes 15 years to be overnight success, but everybody really think it just takes one day. So it's not the case lah, like the reality is that it takes a lot of time, effort, and sacrifices to, be a so-called overnight success. Right. So I hope that the topics that I discussed today kind of helps you guys like understand what inflation is, the assets that help you like navigate through inflation. And we'll go on to the Q&A section. It's a very short list today, but I think it's okay because I think we covered like quite a relatively huge amount of topics today. So maybe the first question is, I like this question. How do you turn inflation into an opportunity?
I this is the kind of question where we like to call this kind of like execution questions. Because like it's inflation in the end of the day, like what we discussed in the last 2 hours of the podcast, it is an opportunity when you are able to capitalize on it. You have like money to allocate into assets that are inflation proof, so that you can grow your wealth from there. Inflation also forces you to change, to adapt to a new economic environment, because um, people who don't, they just get their wealth eaten away. So you have to give credit for yourself about to actually do something about it. In the end of the day, um, the worst thing you can do about inflation is not doing anything. So like to answer the question, like how to turn inflation into an opportunity, I guess from my perspective as a layman, 9 to 5 uh employee, is to increase your income and then reduce spending, and then when you're able to free up that cash flow, invest.
Actually, I do like that because you really do you really do actually like give the solution for a lot of like most people who are 8 to 5, right? Because like I mean like on top of that, of course, like upskill yourself lah, right? Yeah, which is what we've been speaking about for the last point now, which is to make sure they upskill yourself, and then turn your opportunity. Because what I learned, right, um is that okay, I can answer from the business point of view, right? Is that what I learned is that whenever there is a problem, right, when it comes to like business climate, there's always someone out there who manages to get uh opportunity. For every single time there is a problem, there's always an opportunity to solve that problem. Right. So a few examples I've really listed for you guys to hear already. Spotify solved the problem of free music on the Pirate Bay. They make it a lot cheaper in terms of time for the consumer to basically have the opportunity to get the traction. So that's a very good example. The second type of example I gave you guys is basically the model of franchising. When the cost of goods was so expensive that the mom and pop shop were basically struggling, right? A company rose up, franchised the model and unionized, and basically had such huge purchasing power, right, that they drove the cost of food super low, right? So that it drove it so low to the point that today is quite rare to see people who have hunger problems lah. Okay, relatively rare lah. Okay, we're still trying to solve that. It's not 100%, but it's quite rare. All right. So the way that I like to see how to look for, I think the question is how do you like see opportunities, right? Is that look for pain points in people's life and ask yourself, can you turn that pain point and solve this pain point into better, faster, cheaper option, right? Because if you have one of them, let's say it's better, sometimes one is not enough. I need to have at least two, right? It needs to be at least better and faster, right? If not better and faster, at least better and cheaper, right? If not better, right? Then at least faster and cheaper, right? Because you look at a lot of these successful business, right? Most of the time, right, they are usually out of these three, they're at least two, right? You look at those like $10 Korean haircut, right? Are they better? No, actually, I think they suck. But why are they good? Because they're faster and they're cheap.
Mm,
Correct. Supercuts,
that's
a very good example. That fucking hell, their cut is like kana side like that, but they succeed. Why? Because it's fast and it's cheap. It's not better. Okay, to me, it's not better. Okay, I still prefer my Malay barber. I still think that my I still think my pachik is better. Okay, but I go to them because they're convenient. They are faster and cheaper. All right. You go and look at the companies who succeed super well. They have all three. You look at
that's
Spotify, they are better, they are faster, and they're cheaper. You look at the Apple iPhone. All right, they might not be cheaper, but I do think they're better and they're faster. All right, their better is like by a huge amount, like in terms of ease of use, compared to using like before Apple came in, right? Before Apple before the others came in, right? When they first came out, it was significantly better. It was significantly faster, and in terms of cost, it's cheaper. Why is it cheaper? Because I give you an example. My iPhone 6s Plus, I turn on the phone, right? It's made in 2014. This is 8 years, and this phone is still running strong, right? 8 years phone. Have you ever heard of an 8-year phone from Android that's still working? Most of the
no.
time, 2 years you throw away already. So
Yeah.
Apple is cheaper in the long run, right? People trust the brand because in terms of durability, they're up there. They are very like wholesale one, right? So when you want to look for opportunity, my suggestion is, can you see anything around you, the pain point, where you are able to deliver two out of these three factors. If you are able to figure out two, right, then it's very likely you will be able to discover a market that's willing to pay you a premium. That's one thing I noticed, right? It needs to be better, faster, cheaper. Just take two out of these three. If you're able to deliver two out of these three, you have a business. All right. This is how I look at the business fundamentals. It needs to be either two out of these three. All right. So I hope that has helped. I think Ryan pretty much like answered the question of like the opportunity in terms of like what do you call it? Opportunity in terms of personal level. For business level, this is how the way I see it. And I would always say that every single problem, there's always going to be opportunity because the world has look the world, right, has an infinite amount of problems. All right. But the world has a finite amount of people who has the guts to stand up and do something about it.
Or has the solution to the problems.
Yeah. So there's a finite amount of people out there in the world who has the guts and the bravery and the courage to stand out and say, I'm going to solve this today. All right. So, and that is the spirit of entrepreneurship because that fella has the balls to stand up and then solve that problem. So it's hard. It's hard to find people like that. Right. But once you find people like that, that's why they succeed rightfully. Even if they don't succeed, at least they learn something from it.
And
Okay.
just to circle back on like finding opportunity on a personal level, right? You want to be investing into people like that, so companies like that, so that solves problems better, faster, cheaper, 2 out of 3.
Yep, correct. So, okay, let's go to the next question. Okay, the next question we already addressed it is like inflation. I found it was such a good question. I put it inside the main podcast, and that is inflation a vector? Is it bullshit? I think we already explained it. I don't think it's bullshit. It's just that in terms of time, that's how we do it lah. So we go on to the next question. When do we expect inflation to come down? Okay, Ryan, macro pro, maybe you like to answer that.
If I have a pro, if I have a crystal ball like that, I won't be working 9 to 5. But um, like what you mentioned, right? Like where we touched on whether inflation is a vector. It is a vector that has a time delay. So whatever you're experiencing now, right? I think I this is just what I believe, has already happened like at least 2 quarters before that. So probably most likely I'm guessing like based on like the food prices in supermarket where the price hikes are coming to a halt, right? I would say like inflation is coming down soon enough.
Okay, in the short term, when do I expect inflation to come down? All I can say is that if you take a look at the incomes, you take a look at the job market. You don't listen to the reported job market. I think it's more important that you listen to like um the grassroots level. Okay, just ask around the people that you're working with. Just look at the new fresh grads salaries. Then ask them, ask lah, just can ask are their incomes going up? That's always my main question, right? Is your starting salary going up? Is your job hopping? Did your salary jump by 20-30%? Right? Because the only way that inflation can continue to run, right, without people bitching about it, is that your income need to go up, right? Because I say if you want property price to go up, all right, two things need to happen. Either your income goes up to the tandem of property mortgage rate. If it doesn't, all right, guess what? You will run out of people to sell eventually, right? Eventually, you will run out of people to sell to. So eventually, the prices have to come down. So you ask me, when do I expect inflation to come down? I don't have a definite answer, right? And if I do, as what Ryan saying, I do have to work, right? And I'm not smart enough and not like don't have a crystal ball to like roughly see. But from what I'm seeing in the grassroots level, I think that inflation has come to a quick slowdown really. Because if you
Yeah.
look at the prices of I'll give you an example. When Japan announced the opening right of they remove restriction. Do you know if you go to the budget airline right to book a flight from Singapore to Japan? Do you know the price was how much? The return trip?
2000
Yeah,
Sing
close to
dollar.
2000 Sing. Close to
Yeah.
2000 Sing. The day before, it was a return trip was about 600. So it jumped 300% after they announced. So they think a lot of people are so stupid that to pay for a budget airline, right? I just got an email yesterday. After the hype, right, they realized that nobody is stupid enough to pay for it. Do you know what's the price today? Given that
Less
time
than
has
600.
it's less than 600. In fact, right now, a return trip to Japan is cheaper than a return trip to Bangkok.
Ooh, what?
Yeah. Just to give you some perspective, a return flight trip from Singapore to Japan is cheaper than a return flight trip to Bangkok, Thailand.
Wait, what
That
airlines is this?
Scoot lah. You don't believe me, you can
Oh,
search Scoot.
oh my
All right.
god.
So for those people who tell me that inflation is going to peak, okay, I think this at a grassroots level is a sign that they have no choice but to lower it, right? Because nobody is willing to pay.
Yeah, it's all
Because
supply and demand in the end, right?
cost is a fixed cost, right? Because if you are an airline, you have a running fixed cost. So some money is better than no money,
Mm.
right? So this is going to be the case for a lot of like goods and services, I think, going forward in the next 2, 3 years, because people are going to be very careful about how they spend money. When I travel overseas to a holiday destination, I no longer see the same group of people who frivolously spend money like nobody, like no tomorrow. All right. They no longer prance around the luxury goods store and then buy shelves and shelves of luxury goods. All right. When I go to holiday destinations right now, all right, just to share on a grassroots level, I am not seeing people who spend money like no tomorrow, like drinking water. I am witnessing people who go to holiday destinations, and these people are very careful with money. All right, these tourists, the spending habit is no longer like 2019, 2020, where they go inside Louis Vuitton and take and driving out cart full of like bags to ship them back to whatever country they come from. Okay, this group of tourists are going to be tourists who are very selective, very strategic about how they spend money. So it means the next 3 to 5 years, what you are going to see is that there's going to be a very, very heavy emphasis. Okay, if you want to survive in your business, you better make sure you can deliver strategic value for the purchaser. Because if you can no longer half fuck, that's what I'm saying. It's like you can no longer raise prices, then just because you blame inflation, then pretend as though like then the worst is that you drop quality while raising prices, then this is what I call half fuck measure. Right, people are going to be very careful with how they spend their money, and if you are going to half fuck it, right, then eventually you're going to fuck yourself,
Yeah,
right? So that's how I
your
see it.
people will like what we mentioned just now, like the best way to navigate inflation on a personal level is to reduce your bottom line expenses and increase income. So like what, and if you couple that with what Aaron mentioned, how people are going to be more mindful of how they spend, and potentially the people spending behavior will become more frugal, then if people think that they can DIY that themselves, right, they will go and DIY it themselves instead of like hiring some other services.
Precisely, because this is how you get back your money, right? If no one
Yeah,
is willing to pay you for it, then you do it yourself, lah. Correct? Correct or
correct.
not?
Yeah,
So if you are going to provide a good and service, and if you're not going to deliver more value than what a person can do themselves, I say your service is just not going to have people consumers, right? So I think inflation has already like pretty much peaked already, in my opinion. um the way I see it when I travel around Asia, when I travel around the world, I am already seeing signs that inflation has peaked. Houses in California has already dropped by 20% year on year. All right. Singapore property prices, the government has already introduced a lot of measures, right, to basically like limit the amount of price increments. They introduced a lot of cooling measures, like what I told everyone who don't want to listen in the last 2 years. I say the government will print HDB, just wait for it, just wait for it, just wait for it. Next week, next week the article appeared. I said, I just wait for it, just wait for it. The article appeared last week. Nobody believed me. So, okay, never mind. It's okay. But I did tell everyone, right? And
well,
the
it
way
sucks
I
being
see
Michael Burry.
it, yeah, lah. But like the way I see it is that companies that have stellar entrepreneurs will continue to perform, right? So it always goes back to like so many episodes that we keep saying, right? We always keep nailing down like the fundamentals. People who perform always continue to perform. People who are average always continue to be average. Correct. So when do I expect inflation to come down? I think that we have already passed that part already. Right now, I think we're going to have a small recession. I don't think it's going to be a very prolonged one. I think it's going to be a very short one. And I think at the end of it, we'll be better off personally, because we're going to come out of this, right, where people are more mindful with money, and when people are more mindful and careful with money, it just means, right, that more value will be created. So the bang for buck in the next 10 years will be a lot higher than the last 10 years. Okay, you don't believe me? The biggest hedge fund in the world always start to cut headcount already, right? SoftBank. Okay, even SoftBank started to cut money, right? That already tells you something already. Okay, shit is going to go down. All right, even Ray Dalio also quit his hedge fund already. Okay, that should already tell you guys something already. If you're still in denial, then That's on you lah. Okay. My take is that I think in the next like 10 years, we will be able to counter, provided that you are invested correctly. All right.
Yes.
Invest in my take is invest in quality. Don't invest in like invest in things where you really get low quality. Don't invest in things that are shit. All right. If
Yeah.
you can stay with the quality, I think over the next 10 years, they will be prime. They will be in prime position to capitalize on money, right? Who is very desperate to look for quality. It's just that right now, a lot of people, right, because they are so scared to pay that money. They're so scared because they're so cheapskate, right? They don't want to invest their money. They're scared, right? And by the time they invest, it's going to be like 2021. Everybody invests at the peak. So I think right now, if you ask me, it's the time to buy. I already said I already said like the beginning of October. I say right now, from my opinion, right, I think it's the time to buy. I don't think it's the time. I don't think it's the time to save ammo. I said if I have ammo right now, I'll deploy because I've already been actively deploying.
Yeah, this
Yeah.
is starting from like the second half of 2022 till the next 2 years, or is probably the buying opportunity of or maybe next year lah. Probably the buying opportunity of the decade. This kind of like crashes, they come and go every decade. So take your chances while you still can, I guess.
Yeah, because like the macro environment right now is the interest rates around 4-5%, right? So you ask me, I really like wrote in my Instagram post, right? The S&P 500, if you actually take the inverse of it, right now the forward PE is around 70, which gives you about a 6% yield lah. So then the interest rate right now is 4. So the risk equity premium is about 2%, which is a fair valuation. So people ask me, hey Aaron, is the S&P undervalued? I say I don't think so. I think it's fair. All right, I think it's fair value, but fair value means it's not overvalued. So if you ask me, if I have a 20-year time horizon, I will still invest in the equity because I don't care. All right, but if you're a
Yeah.
retiree who is basically like living off your wealth, my best suggestion to you, right, is probably just live like a frugal person lah. I think that's like the best way you can like protect yourself against inflation. Live like a frugal person. Be mindful with how you spend, right? And at least I think you should really speak to your financial consultant, right, to actually like manage your cash flow. I think that's really like the best solution I can give for people who are retirees. But people who are very young, like I'm not that young, but people who are as young as Brian, right? Look, the next 30 years is going to be years of a lot of like every time lah. It's going to be years of turmoil. It's going to be years of ups and downs. Invest in yourself. Use that money. Invest in good quality, high growth assets. At a reasonable valuation, you will do fine, right? I am very sure all of you will do fine. So don't worry so much about it. Um, always look forward and don't worry about what you cannot control.
Exactly.
Yeah. So that goes on to our next question. What is the difference between inflation and deflation? Actually, Ryan, you asked that. Maybe you like to take it. Actually, I'm also curious. What do you think is that? What is the difference?
Oh, we briefly touched on like deflation just now, right? So like inflation is like the increase in the money supply, devaluing of your currency. And I think deflation is the opposite of that. So it's kind of like I guess what we are experiencing right now, right? Where you have like quantitative tightening plus innovation forces are making things cheaper, better, faster. And that will kind of like hyper inflate the other way because number one, your cash is going to go up in value with like quantitative tightening. And then with like the innovation and everything, right? And coupled with like how people are going to be more mindful when they spend money, there's going to be less money going around in the market, and it's going to kind of like deflate the asset prices, but like and it's just basically the opposite of like inflation in my opinion. But I'm not sure if that makes sense or not.
Okay, I think what you mentioned is just that now because we've really like witnessed the 30-40% like jump in terms of like inflation. Basically, you're saying that because of this like stratospheric jump, right? We are most likely going to see like a small little dip in terms of prices. And I actually agree with you because actually, if you take a look at what you call that, Ryan, you have always been bitching about how expensive the graphics card were, right?
Yeah.
In the past like 3 years, right? So like now let's take a look at Nvidia stock.
It does put a smile on my face.
For those of you who don't know, actually like Ryan was talking about Nvidia to me like in 2021 lah. I think when he was talking to me about it, right? I think Nvidia was at like November was like $330. Right. So I was asking Ryan, I said, bro, Nvidia is a good stock. I said, but do you realize that their market cap back then, right, was like $700 billion. So that was my question to Ryan lah. I was like, if Ryan, I say this company, I like the prospect lah. I say, but $700 billion. I say like this like super expensive. That's like almost the same price as Tesla.
Yeah.
So I think after a lot of soul searching, you know, I think after a lot of soul searching, right, I think Ryan decided to not invest inside Tesla. Okay, and I think it was quite lucky because I think after our conversation, I think he saved himself a 60% drop from the all-time high.
Oh, you mean you mean Nvidia, right?
Yeah, Nvidia.
Yeah, yeah.
Like right now their market cap is like cut by 60%. So I think okay, so the problem, right, is that what a lot of people don't seem to understand now is that chips business itself. Actually, you look at the net income, the year-on-year net income in Nvidia, right, quarterly, they drop by 70%,
Yeah, it's crazy.
73%. I look at the numbers right now, their net profit margin dropped by 74%.
Ooh.
And their revenue year on year, right, for Nvidia only increased by 3%. 3%, brother, 3%. So it is very obvious their growth has come to a halt because consumption has gone to rock bottom zero. So this is why when you look at the prices of Nvidia, the graphic card, their graphic card really kind of whack left, right, center, right? So this is what you call cyclical. You know, this is what you call cyclical. You know, the best time to sell is where everybody wants to buy. The best time to buy is when nobody wants it. So, you know, that's like why I've never that's why like, you know, I always told Ryan, you know, I've been following like Nvidia for a longest time, but for the longest time I've never bought because I didn't realize it now in hindsight is because I always see it as a cyclical stock lah. But then, you know,
It
hindsight is
is.
2020, so I can't really say it like definitively lah. But I would say that this goes back to your deflation question, right? What's the difference between inflation and deflation? Inflation is when it's something which is very sustainable. But from my observation, right, I always see deflation as something which is not sustainable.
Yes.
Because I always think that inflation is something that human nature just loves to see. But in terms of deflation, my observation, right, it tends to be very temporary. It tends to be like maybe 3 years, 4 years, 5 years. You know, prices will come down a little bit. You know, so I think like maybe prices will come down a little bit, maybe for the next 3 to 5 years. But I think eventually, after that 3 5 year mark decrease, we'll go back up again.
Yeah, it's a temporary thing, deflation, because you can't have like innovation all year round. So
Yeah, and also like when you live in a deflationary environment like the Great Depression, nobody want to spend. Then nobody is going to create new business because everybody is playing defense, what? Right or
yeah,
not?
everybody busy trying to survive.
Yeah, so if you keep playing defense and nobody is playing offense, then eventually you will not get innovation and you won't get new items. You know, you won't get new stuff that improves the quality of your life. Like how many of you, right, like take your phones for granted? Do you know that your Apple phone was only released like how many years ago? Like only like less than 15 years ago. You know, in it
Yeah.
like within 10 years, the Apple phone became such an indispensable part of your life that you just take it for granted. Right. First thing you touch is your phone when you wake up. The last thing you touch, as I like to say, hopefully is your wife. It's not your wife, then at least it's your phone. All right. So my take is that deflation tends to be something which is very temporary. In the longer run, I always see that inflation is something that you need to learn how to live with. I just see it as a permanent thing that will never go away.
Yeah. Okay. So I guess we've reached the end of the podcast with that last answered question. Any last words before we sign off, Aaron?
Yeah, I would like to say, I think like actually we wanted this podcast episode to be sometime next year. Because we actually have like some guests lined up lah. But I think it's okay that we do this because I think it's quite timely. So I hope that it has addressed a lot of questions that you guys have on inflation. Because I think over the past like year, I've been getting a lot of like tags and a lot of text, directed messages from Instagram. Even my own friends, some of my clients, they also like, oh, Aaron, inflation is very horrible. What can I do with it? So I hope like this particular episode answers a lot of questions because I don't know how well we have answered because I mean we try our best lah. I hope that it has answered at least give you guys some insight to the way that we think about inflation, the way that we navigate it, and it's really not a trade secret. You know, at the end of the day, the way to navigate it's not a trade secret. It's to invest in yourself. All right. And we've been saying that since the start of this like podcast, right? Is to invest in yourself, have confidence in yourself, and always have an open mind to look out for opportunity. Because if you can do that, right, you realize, right, that people who manage to do very well, right, are people who are very, very adaptable. Almost every single guest that we have brought on to this channel, the people who have considered tend to be people, right, who are very, very good at adapting to circumstance. They do not let the circumstance define their success.
Yes.
Okay. People that come onto this podcast and people that we bring on this podcast are people who define success at their own terms. They will never allow a situation to define their success. And I think that is something, right, that you guys should take a very good look at when it comes to inflation. Because inflation, as what Ryan has rightfully mentioned, is not something you can control.
Yes.
Okay. And that is my message for all of you. What about you, Ryan?
Yeah, I think well, like what you mentioned, I think it's a pretty timely to do this episode in inflation. Just like most of you out there, I'm also like quite clueless when it comes to money. I'm also relatively quite new in the realm of like adulting, and to be alive during hyperinflation at a time like this is a pretty good experience, because to be able to experience something so early on in your career, while you're just starting out, it's a great time to be alive, to observe and learn. So I would say, like, take this as an opportunity to learn, so in the next following decades, right, when you are 30 and 40, where your finances are much more, it's much more important, where things are more at stake, when you have like a family, or you have to pay more serious bills. You know how to navigate this, so you can take this as like a trial run. So like, I guess like one of the best things to do is to keep a journal, like, and write your thoughts and your observations down. So when you look back at it, you understand what actually happened. You broke it down: 2020, 2021, 2022. What happened? You real time coverage. And things like this is just gonna repeat itself, like, because inflation is not something that will go away. Market crashes come and go every decade. So in the next crash, you would know what exactly to do. So yeah, take this as an opportunity with an open mind. But of course, be not, focus on yourself in the present. Try to keep yourself going alive with your cash flow and everything. And but also keep an open mind to learn and look forward to the future, and be optimistic about it. So that's my take on this whole episode.
Yeah, I agree. Your thoughts shape your future, I find. Like you need to like be optimistic because if you're always pessimistic, then your future is quite shit.
Yeah.
Yeah. So, well, with that, I think that pretty much wraps it up. Definitely, I hope you guys have enjoyed this episode as much as both me and Ryan have definitely enjoyed it. So, both of us are on Instagram. For Ryan, if you want to follow him on his Instagram channel, is Food and Stongs. Then for me is Aaron Goes Global. And hopefully this has pretty much opened some insights on this topic on inflation. And we will definitely see you in the next episode.